Good morning, students. I am CA Shilpa Agarwal. Today I will be taking your session for final paper 1 financial reporting, Ind AS 23, borrowing cost. This is your module 2, chapter 7, unit 4. Today, before starting the session, let me first tell you I'll be solving all your queries on real-time basis. So please be free to ask any query related to today's topic, and also be interactive, be participative, so that this session is more useful to you only. More you ask your question, more you respond to my concepts, whatever I'm explaining, you'll be able to grasp things and will be more clear about the concepts. Also, I'll be taking all the illustrations of the study material as well as the tested knowledge questions. At the end of the session, I'll also be giving you some MCQs to solve, so that, and I'll be asking for the answers. So be interactive, participative, then only you'll be having a fruitful session. Okay, so let's start my session with, before starting, one more thing I would like to say, the section wise weightage of this topic. Ind AS 23 is your basically in section 3. It's asset based standards, and the section wise weightage, this is, we have 8 asset-based standards in this particular section, along with some two liability standards also. So the weightage you have to take care of is that questions of almost 5 to 8 marks may appear from this topic. In general, in past, whatever examination had been occurred, in that it was almost 6 to 8 marks question which had come in the examination. So you have to take care of this chapter. This is a small standard, small chapter with easy concepts. So if you go through these concepts thoroughly, you will be able to fetch full marks if question on this standard appears in your examination. So let me start my screen. Let me share my screen. Hope students, my screen is visible to you all. Is my screen visible? I would like to know the answer from you all, students. Okay. Srinidhi, good morning. My screen is visible to you? I'm waiting for the reply, and all other students who are participated, who have joined, login and are viewing this session, I would like everybody to come up with their answers. Fine, I got the reply. Srinidhi, Sairam, good morning, and thanks for giving the answer. I'm moving ahead. So this is the standard Ind AS 23 borrowing cost. As the name suggests, it's borrowing. Borrowing is what? Something which you get. You are taking money from something which is not, you are not the ownership of that. You do not own that money. That is, you're not in your control. It's not your ownership. However, you have to return later on. So that's why it has been termed as borrowing. Borrowing is basically an inflow of the money. However, when you borrow money from somebody, you have to pay some extra cost while returning that. For using that money over a period of time, you need to pay some extra cost. That is outflow. Outflow will not be whatever you have received plus additional amount. So that additional amount will considered as a cost. So borrowing cost in total is the standard name, and we'll be dealing with borrowing cost. First of all, I would like to know. Good morning, Tanushri. Good morning, Priya, Jay. First of all, I would like everybody to answer what comes into your mind when it is there. What is borrowing cost? Which account do you feel should be used for accounting the borrowing cost? Whether it will be personal account, it will be real account, or it will be nominal account. I just want the answer from you all. What comes to your mind when you listen borrowing cost? Which account immediately comes to your mind? I'm waiting for the answer. Which account comes to your mind? Personal, real, or nominal? What do you feel borrowing cost should be accounted under which account? I'm trying to be more and more interactive, and I would like you all to be that. Okay. Sairam is saying nominal account. In general, yes, borrowing cost is an expense. We are paying some extra thing to use those amount cash or any other kind of inflow borrowing. So definitely it is an expense. But then why this standard has come into the picture? This is not a new standard. This standard was earlier in your accounting standard AS 16 borrowing cost. This is there at international level, like International Accounting Standard 23, based on which we have conversion brought Ind AS 23 borrowing cost. So this is not a new standard. But why this standard has come when it is very apparent that it is a nominal account. So what is different? What is the difference? What is different because of which we have come out with this standard? That's what we are going to study in this whole session. In general, borrowing cost is an expense. However, why do we borrow? We borrow it for many reasons. One of the reasons is for working capital, for your day-to-day functioning, for day-to-day operations, your management, you borrow money. And one is to acquire any asset, acquire, purchase, or construct any asset. You are borrowing the money. You are not having fund, but you are borrowing it. And with those funds, you are constructing some asset. When you are constructing that asset, you have to determine the cost of that asset. In determining the cost of asset, we should also be aware whatever other elements which also are directly attributable to that cost of the asset. One of the elements of directly attributable cost to that particular asset is borrowing cost. Because if you have not brought the money, if you have not borrowed the money, you would not be able to spend to acquire any asset or to construct any asset. So in such a situation, or produce any asset. So that is why this expense, borrowing cost, the amount which you will be shelling out to use that borrowing will also be considered as directly attributable cost for acquisition of that asset. So in such a situation, that borrowing cost will not be expense. In that case, that will be a real account. So borrowing costs have two treatment. One is nominal account, one will be real account. When it will be real account, when it will come to real account, it will not exactly in terms of borrowing cost, it will merge with the cost of the asset. Any asset, it can be property, plant and equipment, it can be investment property, it can be intangible asset. Other standards are also there for your asset-based standards, like Ind AS 41, but for 41 biological assets, the standard would not be applicable. There is a specific scope out of from in the standard. The reason behind that is those assets are measured at fair value. So we'll be going through that also. This was a brief background which I'd like to share with you all. So let's start with first, what is the core principle of this standard? Before starting the core principle, I would just like to give the synopsis, what we are going to cover in this session. First, we'll be discussing about the core principle, which just small brief introduction I have given to you. After that, scope, then we'll discuss key definitions of borrowing costs and qualifying assets. After that, we'll be discussing recognition of borrowing costs when there is specific borrowing, when there is general borrowing, and in case of general borrowing, how to calculate capitalization rate, because of through capitalization rate only we'll be able to calculate borrowing costs in case of general borrowings. Then the period of capitalization. Period of capitalization is basically when you have to start capitalizing the borrowing cost, when you have to stop the borrowing cost, that is cessation of capitalization, and also for the temporary hold of this capitalization, that is called suspension of capitalization. We'll be discussing under period of capitalization, and there are certain other relevant concepts also, 2 or 3 concepts that also we'll be discussing, and at the end, disclosures, which is also part of the standard, and also at your level, final level, that may be required for your financial reporting paper, and also as well as for your global financial reporting standard paper. So view this standard or just go through this session, and this session is applicable to you not only for paper 1 financial reporting, but also for your global financial reporting standard paper, those students who will be opting for elective paper 6E GFRS. Fine. And also this standard, though we have already covered a batch 3 on which was applicable for May 22 examination. However, since this standard does not have any amendments which is not applicable for May 22, so those students who will be appearing for May 22 examination may also go through this session. This is relevant for both May 22 examination as well as November 22 examination. So what is the core principle? Borrowing cost, as we discussed earlier, there are two types of borrowing costs. One, the borrowings which we take for running of our day-to-day management, for working capital, and one is to acquire any asset. So mainly in this standard, we'll be discussing borrowing cost which we have taken or which we have borrowed for acquiring any asset. Acquiring may be production, may be construction of that asset, depends on what is the kind of asset which is used. So acquisition of asset, any borrowing for acquisition of the asset, we have to see that borrowing cost on those borrowing, how to treat that. It forms part of it. Those borrowings which is used for borrowing the cost of the asset will be forming part of the cost of the asset when they are directly attributable to the acquisition. I hope I'm having my fingers. Which is directly attributable to acquisition of a qualifying asset, acquisition of asset, construction of asset, and production of asset. So in all the three cases, we have to see acquisition, construction, and production of an asset. Now, here asset is also restricted. Any asset will not be considered asset which is a qualifying asset. So one has to take care, one has to see while capitalizing the borrowing cost, whether the asset is a qualifying asset or not. What is a qualifying asset? That we'll be discussing later on. Just for giving a brief here, qualifying asset is an asset which is not ready for use immediately at the time of purchase or immediately when you are incurring your borrowings. In case you have taken any borrowings and from those borrowings you have acquired any asset and that asset is ready for use, intended use or sale. In that case, that asset is not a qualifying asset. For being a qualifying asset, that asset needs substantial period of time for completion, for its intended use, for ready to use, for its ready to intended use or sale. We need substantial period of time. Then only for those period we'll be capitalizing the borrowing cost. So important is that the asset should be a qualifying asset. And also one more important thing which has to be taken care of is directly attributable. Directly attributable cost should be directly attributable. It should not be that any cost, we have not taken any borrowing, we have not incurred any borrowing costs, we have used our own funds. Out of those own funds, we assume that in case we have not acquired this asset, we have used those funds in investing something, we would have earned interest. So that notional interest which we are having in our mind, in case we have not acquired that asset, we have used it somewhere for investment, we would have earned some interest. So that should also be capitalized. So no, that is not directly attributable cost. That is not actual borrowing cost. That is notional cost. So it will not be considered under this standard. So any directly attributable cost related to acquisition of asset, a qualifying asset, will be capitalized. Hope this is clear. This is the basic principle, and any other borrowing cost which is not acquired for, which is not used for acquiring any asset, will be expense in your profit and loss. So in this case, this is nominal account. This expense, this borrowing cost, which will be expense in your profit and loss account in the period in which it is incurred, will be considered as your nominal account. However, which forms part of the cost of the asset, this will be real account. But the existence of borrowing cost will be in the form of the cost of the asset. It will be one of the element of the cost of the asset, not okay. It will be cost of, you will not be able to see a real account in the form of borrowing cost. You will see the cost of the asset. In that cost of the asset, one of the element will be borrowing cost. Okay. Now hope it is clear whether it is why it is nominal account and why it is real account. Jay, Saina, Tanushri, hope it's clear. Shall we move forward? Okay, let's move on to scope. Scope. Okay, Sairan have asked one question, ma'am, why not consider the other than qualifying asset in borrowing cost? See, what happens when we are borrowing anything, we have to, interest is not for a point in time expense. It is over the period you are incurring that expense. You are utilizing the borrowing for say 2 months, for 2 years. So for 2 years, when you are utilizing that fund, you have to pay the interest. Your interest calculation will be not for one day, it will be for your 2 years, it will be for a year, for a particular month. So any asset which you have acquired and are using immediately, your interest would not incur because interest is over the period expense. That's why it will those assets will not be considered as qualifying asset, and on those assets we won't be capitalizing the borrowing cost. For the purpose of this standard only, Ind AS 23, the asset has been termed as qualifying asset, just to bifurcate any asset which is ready for use immediately and any asset which will be used after some period. That's why the term qualifying asset has specifically been given in this standard. You won't find it in some other. If you will be finding qualifying term qualifying asset, it will be in terms of your borrowing cost only. The reason behind this is that you have to differentiate between the asset which is ready for use immediately and for over the period. Over the period only you are incurring the interest. That's why it is considered as for qualifying assets only. You have to capitalize the borrowing cost. Hope, Sairam, I have answered your query. It is clear to you. I would like to see just had you understand this or not. Okay, let's move on to since I think in real time also there is a few seconds gap, the time when I speak and the time I get the response. Meanwhile, I'll just shift to the scope. Still, I'm waiting for your answers. Okay, let's move on to scope. Ind AS 23 says for any dietary attributable expense. Okay, Tanushi replied yes, no? In Ind AS 23, Ind AS 23 has scoped out certain expenses, certain borrowing costs not to be capitalized on, or certain assets on which this standard will not be applicable. First is borrowing cost which will not be applicable is the actual or imputed cost of equity, including preferred capital not classified as liability. If you have studied your financial instrument standard, there you would come to know the preference capital is not necessary to be your capital. It may be also considered or classified as liability. In case you are classifying preference share capital as a capital and not an equity, in such a situation, any dividend which you are paying on those preference share capital will not fall within the purview of this standard. This means, what does this mean? We pay dividend on equity shares, we pay dividend on preference shares. Then why are we specifically scoping out this particular nature of expense from this standard? In certain places, like in bonds, like in your preference share capital, which is classified as liability, we pay dividend. Dividend is the term used for them also, but when preference share capital is considered as a liability, the dividend paid on those preference share capital will not be considered as dividend. They will be treated as interest in our accounts. So that's why any preference share capital which is classified as share capital itself, dividend paid on that will not fall within the purview of this. Because in that situation, dividend is dividend only, dividend is not an interest as per this standard. So actual or imputed cost of equity. Imputed cost of equity means it's not necessary that we have declared dividend every time. We assume that this type of dividend or any we are going to issue in future any shares. We are assuming that this type of dividend will be paying to any notional dividend which we are considering imputed dividend, effective interest rate based on that. So those imputed cost or actual dividend which we are paying will not fall within the purview of Ind AS 23 if it is paid on capital. Fine. like dividend paid on equity shares, cost of issuance of equity shares also. When we are issuing an equity share, we have to incur certain expenses like for underwriting commissions, for your prospectus, or whatever is there. So those expenses for issuance of equity shares will not be considered as borrowing cost. Here, a clue is there. A clue is that it means interest only is not a borrowing cost. There may be certain other expenses also which will considered as a borrowing cost, which we'll study later on. But from here, we can assume that cost of issuance. Cost of issuance means not only dividend, any other cost of equity shares. Since it is an equity share capital, that will not form part of the borrowing cost as per this standard. Why as per this standard? Because this standard talks about borrowing cost, which is to be capitalized. So this cannot be capitalized. Cost of preference share capital, not classified as liability. In case it is classified as liability, then we have to see whether we can capitalize dividend paid on those preference share capital, preference shares. Okay. Now, another thing, first thing was borrowing cost. Now we are talking about certain assets on which if any borrowing cost is incurred, still it won't be capitalized. In the first scope out, we studied the nature of expense, which will not be considered as borrowing cost for capitalization. Here we are talking about borrowing cost incurred on certain assets, which will not be considered for capitalization. One is qualifying assets that are measured at fair value. If any qualifying asset is not measured at cost, it is measured at fair value, then it is taking account of everything. Fair value measurement takes account of everything, even your market inflation, even your whatever the cost it is there. Every element of cost is considered while measuring the fair value. So it already accounts for those directly or indirectly. It is already accounting for borrowing cost. So we will not capitalize it again. So any qualifying asset that are measured at fair value will not be considered here for capitalization of borrowing cost. Example is given in the standard also, in the study material also. A biological asset accounted for under Ind AS 41. If the assets are held under fair value model with all changes going to statement of profit and loss, then capitalization would not affect measurement in the balance sheet and would involve only reallocation between finance cost and the fair value movement in the statement of profit and loss. See, if for a particular date I have measured any biological asset, say for ₹100, in another coming after 1 year in the reporting date, in next reporting date, I am measuring it as 110. So this 10 is the change in the fair value will be routed to profit and loss. So in that case, 10 rupees is already being expensed out in the profit and loss. Borrowing cost, which is included in that 10 rupees or in the 100 rupees, that is already there. So we are already indirectly, we are putting it in the profit and loss. It's only changing in the name of the terminology, whether we are putting it as a financing cost or we are putting it as a fair value changes. So because of that, there should not be a cascading, but there should be not a double impact of expensing it out or capitalizing. That's why this particular nature of asset, which is measured at fair value, has been scoped out. Similarly, inventories that are manufactured or otherwise produced in large quantities on repetitive basis. So what is important is large quantities on repetitive basis. Similarly, first it was at fair value, measured at fair value. In second case, inventories that are manufactured or otherwise in large quantities on repetitive basis. Why this has been scoped out? The reason is that there was a practical difficulty in identifying it. Sometimes it is not that any specific borrowing is taken for manufacturing a particular inventory. It may happen that companies having a centralized financing system, they generate funds and out of those funds they allocate it to different departments or for different work. So in that case, when they are allocating those funds for manufacturing of inventory, and that inventory is on regular basis, we are manufacturing that inventory, repetitive basis and large quantities like your daily consumption item. Then in that case, it is very difficult to identify for which item how much cost was incurred. There may be changes in the interest rate, there may be changes in over the period. So allocation of that is quite difficult. So tracing them is difficult. So standard setters have given a special exemption to those to the entities, those who are manufacturing inventories in large quantities on repetitive basis. However, if they take substantial period of time, then and can also allocate properly what amount of borrowing cost can be identified for this particular type of inventories which are manufactured on repetitive basis in large quantities, then entity may capitalize it. However, standard in general have given the relaxation or exemption that entities are not required to capitalize borrowing costs on such inventories. But if you are able to, if those inventories take substantial period of time in manufacturing and entity is able to allocate the borrowing cost, directly attributable borrowing cost to those inventories, then they may think of capitalizing also. There is one illustration in your study material, I guess in illustration 1, which is on cheese, we'll discuss later on. However, you understood the basic reason, no? So we'll just move to the next slide. Borrowing cost definition. First of all, we should understand what is borrowing cost. What are the items which are included in the borrowing cost? So borrowing cost is an interest that an entity incurs in connection with the borrowing of funds. Borrowing of funds, any interest expense which an entity incurs for using the borrowing of funds which they have borrowed. There are 3 types of expenses which an entity incurs when they borrow funds or when they use those funds. One is interest expense. Second is interest in respect of lease liability. What is lease? You study in your Ind AS 116 that any fund which you are going for an agreement which is a lease agreement. In that lease agreement, you have to calculate a lease liability and a right of use asset. Those in lease liability, we account those lease liabilities in our books at present value. When we account at present value, the absolute amount which was there at the time of the contract price or the purchase, the consideration of that lease contract, we do not record exactly the same value as our lease liability. The present value is different from the lease liability. In such a situation, we calculate the finance cost every year with effective interest rate, implicit rate. No? So that from that interest in respect of those lease liabilities, which is calculated as per Ind AS 116, recognized in accordance with Ind AS 116, will be considered as part of your cost of the asset and for right of use asset. You can say for right of use asset. So that is also permitted under the standard borrowing cost. Such interest will be forming part of your borrowing cost. Any exchange difference arising from foreign currency borrowing. What happens, for example, if you have borrowed funds from any foreign country in any foreign currency, then there's whatever interest you are paying on those funds, that is your borrowing cost for sure. But beyond that, because you have borrowed funds from in foreign currency, there will be foreign exchange changes also. It may be your gain also, it may be your loss also. So in case of loss, what happens that we calculate there is some element of interest hidden in that exchange loss. How we calculate that element, that hidden element of interest in that exchange loss, that we compute and we consider it as borrowing cost, interest only, and we capitalize that. By how we calculate that hidden cost is that we assume in case we have not borrowed funds from foreign country in foreign currency, we would have borrowed from in our functional currency, in our rupees only. For example, we are in an Indian entity. So instead of borrowing from foreign currency or in foreign currency, we have borrowed in Indian rupees only. In that case, what would have been the rate of interest? What would be the exchange loss which we have saved that? So based on that, we'll be identifying the amount of borrowing cost, and that will be capitalizing. We'll be discussing that. We'll be having few examples on that. Okay, next. So these are the 3 elements. Exchange difference we'll be discussing in detail. Recognized to the extent they are regarded as an adjustment to the interest cost. That's what I told. Due to exchange difference, in case there is an exchange loss, in those exchange loss, there may be certain element which will be considered as an adjustment to interest cost. So we'll be discussing that only. Let's understand this concept with the help of an example. An entity can borrow. So an entity can borrow funds in its functional currency at the rate of 12%. However, it borrows $1,000 at the rate of 4% on 1st April when dollar rate was $1 was of rupees 40. It means in case we have borrowed it in functional currency, in rupees, if we would have borrowed, how much amount we would have borrowed? $1,000 into 40 rupees. It means we would have borrowed 40,000. And when we would have borrowed this 40,000, we would have borrowed at the rate of 12%. However, here we have borrowed at the rate of 4%. So interest is payable on 31st March. After 1 year, an exchange rate after 1 year is rupees 50. Since it is an interest expense, we have to use the closing date. The loan is not due for repayment. So this 1,000 is outstanding at the end of the year. Interest cost 1,000 at for $1,000 at the rate of 4% will be your 40 rupees, $40, and in this $40, when converted at this exchange, you'll find for rupees 50, this will amount to rupees 2,000. Fine. So this 2,000 rupees is your borrowing cost. First element we got. However, in case this 1,000 will now be not considered at rupees 40 in the reporting date, we have to measure it at the closing, the exchange rate which was there on the reporting date. So 1,000 will be measured at rupees 50. This will be now your loan is not of 40,000 rupees, it is of 50,000. So what is the exchange loss? The exchange loss is of 50,000 minus 40,000. 10,000. Now we have to see what is the hidden element in this 10,000, which needs to be capitalized. This is for sure to be capitalized since this is a borrowing cost. For this exchange, out of this exchange loss, there may be two elements. One will be exchange loss and one will be borrowing cost. We have to identify what is borrowing cost. So first of all, we have to see in case we have borrowed in Indian rupees 40,000, what would have been the interest cost at the rate of 12%? We would have paid at that time borrowing cost 40,000 पे 12% से हमने pay किया होता. So 40,000 पे 12% it comes to 4,800. 4,800 minus 2,000. We have in actual we are paying 2,000 borrowing cost. However, if we have incurred this borrowing in our Indian rupees in our functional currency, we would have paid 4,800. We would have ended up in paying 4,800. So what was the saving which we have done? It was 2,800 of interest cost saving which we would have done. So this 2,800 is also your borrowing cost. This borrowing cost, and remaining your out of 10,000, if we subtract 2,800, we get 7,200. This 7,200 will be your actual exchange loss. Hope I am clear. I am able to tell you properly how we have arrived. Now I am just trying to explain that in Hindi also. हमने अगर 1,000 का जो डॉलर में लोन लिया था उसकी बदले हमने उसको 12% से इंडियन करेंसी में लिया था, तो हमारी नीड उस समय 40,000 की थी. हमने तभी $1,000 का लोन लिया एट द रेट ऑफ ₹40. हमने उसी 40,000 का इंडियन करेंसी में लोन लिया होता तो हम आज की डेट पे 12% से पे कर रहे होते इंटरेस्ट. और हम 12% पे पे कर रहे होते तो हमने अपनी बुक्स पे फाइनेंस कॉस्ट कितने की कैलकुलेट की होती? 4,800 रुपीज से. पर क्योंकि हमने डॉलर पे पे किया था, डॉलर में हमें जब हमने बोरोविंग्स ली थी 4% से हमें इंटरेस्ट आ रहा था, तो 4% से हमने जो पे करना था वो हमने तो 2,000 और उसका हमें $40 का जो हमारा इंटरेस्ट कैलकुलेट हुआ उसको हमने क्लोजिंग रेट से कन्वर्ट किया, तो हमारे सिर्फ 250 रुपीज हमारी क्लोजिंग रेट थी, एक्सचेंज रेट ऑन रिपोर्टिंग रेट, तो हमें 2000 का ही सिर्फ बोरोइंग कॉस्ट पे करना पड़ा। पर एक्चुअल हम अगर 4800 पे कर रहे होते तो हमने कितने की सेविंग की, 2800 की सेविंग की। तो दिस 2800 सेविंग ऑफ इंटरेस्ट इज समवेयर indirectly incurred by an entity when you are incurring the exchange loss of 10,000. So 2800 is within less than 10,000. To the extent of 2800 will also be considered as your borrowing cost. So your total borrowing cost will be 2,000 plus 2800, that is equal to 4,800. Hope this is clear. Hope this is clear. Exchange loss is 7,200. Yes, Srinidhi, exchange loss will be 7,200. Actual exchange. In computation, it is appearing that exchange loss is 10,000, but in actual, the exchange loss is only 7,200. 2,800 is the hidden interest element in that exchange loss, which will be considered as an adjustment of borrowing cost only. So in actual, we'll be considering 2,000 plus 2,800, 4,800. Let's move on to the second illustration with certain changes in the amount. Here we are seeing, in the previous example, we saw that the exchange rate on the reporting date was 50 rupees. However, here we are saying the exchange rate is rupees 41. Same thing, we borrowed $1,000. We borrowed $1,000. If we would have borrowed in Indian currency, it would have been rupees 40,000. Fine. In that 40,000, we would have paid interest cost, interest in rupees would have been 40,000 at the rate of 12% is 4,800. However, we have incurred expense of 4%. Actual borrowing cost in foreign currency, we are, let me just multiplied with the exchange rate. Okay, 41. $100 into 4% is $40. This is the interest cost in dollars. When we convert those interest costs in rupees, we'll be coming at rupees. Just use my calculator. 40 into 41. Your cost is coming 1640. 1640 is your actual borrowing cost. This is your actual borrowing cost, which you have to account for. You have to consider if this foreign currency borrowing is for acquisition of a qualifying asset, this will be capitalized. However, we have to take out the exchange loss also. What is the exchange loss here? $1,000 multiplied by 41 minus 40. This 1 rupee exchange loss we have incurred, so it is 1,000. Fine. So 1,000 is the exchange loss. Now, however, we have incurred 4,800. So the difference is 40. What extra saving in borrowing cost we have made is your saving here comes to rupees. What is coming? I want figure from you all. Sorry, and my calculator is not working. Oh, I'm having some queries also, ma'am. But exchange loss is 2,800. Sairam, you were talking about last previous example. I'll come back to your query. Just let me solve this example. I'll come back to your query. Here in this case, 4,800 was the interest which you have paid in case you have borrowed your the fund in Indian rupees. You would have again paid at 12%. So this is the 4,800 which you would have paid in case you have borrowed in rupees. However, you borrowed in dollars. You are paying 4% interest, and the closing rate is 41. So your 1000 into 4% into 41 is coming to 1640, which is actual borrowing cost. Exchange losses of $1,000, only 1 rupee has increased on dollars in dollars. So now your exchange loss is rupees 1. 41 minus 40, 1 rupee into 1000. This is your exchange loss, total exchange loss. Out of this, now you have to identify what is actual exchange loss and what is your borrowing cost, hidden borrowing cost. Since for that we have to take the difference between these two elements. So 4800 and this comes to, I don't know what is going on, 1680. 3160. But this 3160 with the saving which you have done is more than what you have incurred as exchange loss. And out of 1000 you have to bifurcate. Within that 1000 you have to bifurcate how much is exchange loss, how much is borrowing cost. But your borrowing cost, saving in borrowing cost is 3160, which is much more than 1000. So you have to restrict this saving to the extent of this 1000. What does this mean? That your borrowing adjustment for borrowing, hidden borrowing cost will be 1000 and your exchange loss will be nil. You cannot account for this 3160. You can account for only 1000. You have to identify out of this 1000 only, out of this 1000, what is included as exchange loss, what is included as borrowing cost. So hope you are understanding. What I would like to say is that any saving in interest because of borrowing from because of borrowing in foreign currency rather than borrowing in rupees will be accounted as borrowing cost to the extent of exchange loss. In case exchange loss is more, then you can account for total saving as borrowing cost adjustment. In case your exchange loss is less, here in this second example, exchange loss is less, then you have to restrict your saving to the equivalent to exchange loss. You cannot account the whole saving. That will be a notional saving. In actual, if you see, this 3160 is your notional saving. Out of this, but actual loss which you are incurring is 1000 only. So 1000 to an extent of 1000 only you can account for. Be careful. Remember this point. I'll be asking MCQ also. I'm just giving you a hint. Be attentive because there will be MCQ based on this. So in case you are incurring any exchange loss, but your exchange loss is less than your saving in your borrowing cost, then you have to recognize adjustment to your borrowing cost to an extent of exchange loss only. You cannot increase your exchange loss. You have to restrict the amount in exchange loss. So in this case, we will consider this whole 1000 as your borrowing cost adjustment and not as, and your exchange loss would be nothing. So in what will happen in this case? Total 1640 plus 1000, 2640 will be capitalized. If that, I'm assuming in this question that this foreign currency borrowing is used for acquisition of qualifying asset. So that's why we are capitalizing it as borrowing cost, and in P&L what will go? Nothing will go because there is no exchange loss. So nothing will go to P&L. Fine. Hope this is clear. Hope this is clear, students. See, I'm taking a lot of time to explain one example. We are 45 because this is basically calculation of foreign exchange difference, which is to be adjusted as your interest element for capitalization. This is one tricky question, one tricky concept which you have to understand very clearly. And one tricky point is when you are calculating the capitalization rate in case of general borrowing. So that also we'll be discussing in detail. Hope this is clear because we are going to the third variation in this particular section only. Okay, one question Jay is asking, are savings credited to P&L or treated as cost? Savings, I'm using in layman language. Savings are credited to as cost to the extent of your exchange loss. Savings cannot be credited to P&L. See, that's why we have not, the saving was for 3,160 rupees, but we have restricted it to the extent of amount of exchange loss, which was 1000. I'm changing the color just for understanding. This 1000. This 1,000 is the exchange loss. We have to restrict our saving to an extent of this 1,000 only, to an extent of exchange loss. We cannot go beyond this exchange loss, because beyond that exchange loss, whatever extra saving which we are doing, that is your notional saving. Notional saving will not be considered anywhere in your capitalization part or in your expensing, while doing expensing it out in your profit and loss account. Fine. Srinidhi, thanks for giving your clearance. Hope, Jay, that is clear to you. Savings credited to P or treated as cost. It will be treated as cost. That's why I am saying here. This saving to an extent of exchange loss, this 1,000 is your borrowing cost. Borrowing cost, when I am talking about borrowing cost in this under this standard, it means borrowing cost for capitalization. Okay, everywhere if I'm only saying borrowing cost, I'm missing the word capitalization. But since we are talking about Ind AS 23, please consider it as borrowing cost for capitalization. This standard talks about borrowing cost for capitalization. Okay, so what amount to be capitalized, that we are computing right now. Hope it is clear. I'm moving to the third illustration. Third variation in the same case. Again, we are having borrowing, which is if we would have borrowed in 12, if we would have borrowed at 12%, we would have borrowed in Indian currency, it would be at 12%. Again, we borrowed at $1,000 at 4%. At that time, exchange rate was 40. Similar situation. These two situations are similar. In fact, these three situations are similar. In previous illustration, we changed the exchange rate. However, again, we are coming back to the same exchange rate of ₹50, but we added one thing. Instead of now from 1st April, this is from 1/4/2000 X1, we move to X2, we move to X3. Now we are talking about X3 also. What happens after in the second year? In the second year, here your exchange rate was 40, then it increased to 50, and then it decreased, it reduced to 44. Definitely, here you are having exchange loss. Here you are having exchange gain. Your last year, you brought down your loan to 50 rupees. But now, in this year, at the end of this year 20X3, your rate exchange rate is 44. So you have to reduce your borrowing amount. Your liability, when it's reduced, it is your gain. This will be exchange gain. Then how to account for? First of all, same thing as we did in first illustration. 2,000 was the borrowing cost, actual borrowing cost, which was in foreign currency. I'm just directly calculating that. Hope you have done in your copy also. Saving in exchange loss was of 10,000 in actual. Out of this 10,000, we did two bifurcation. One was actual exchange loss, which came to 7,200, and was borrowing cost adjustment, which came to 2,800. Hope this is clear. I'm not again calculating that. This is 2,800, which we accounted for in this 2,000 plus 2,800, total 4,800 we accounted in 20X2 as. This arrived to 4,800 in 20X2 as borrowing cost. Fine. Now we are moving to X3, 20X3. What happened in 20X3? We were having same amount of loan. Loan was not due for payment. It means when we calculated on this amount at the rate of 4%, and the exchange rate was 44. The interest cost which we paid was 1,000. Sorry, what I did? 1,000 into 4% into 44. We paid. Something went wrong with my 1,760 is the actual borrowing cost. Now we have to calculate the exchange. 1,000 borrowing was previously recorded at ₹50. Now it went down to 44. So there is exchange gain. Exchange gain is to an extent of ₹6. So it means 600 sorry, 600 or 6,000? 6 into 6,000. The 6,000 is your exchange gain. What happens in this situation? Now the question is, we are saying if it is an exchange loss, then we have to account for, we have to find out what is the hidden element of interest. But in this case, there is exchange gain. So what to do? Exchange gain is your could not be considered as your cost. No? This is your gain, cannot be considered as cost. So what to do? In that case, what we'll see is that in previous year, what we have done. In previous year, we have accounted 2,800 as your adjustment to interest on account of which you have extracted from your exchange loss. This 2,800 was extracted from exchange loss. So to an extent of 2,800 exchange loss, which you have debited as an interest cost in your asset, that will be reversed. There is an provision in your standard in case you have in any previous year accounted any adjustment for interest element from your out of your exchange loss, that can be reversed if in future years there is exchange gain. Exchange gain to that extent, because your exchange gain is 6,000, but you have done that 2,800 the saving you have done here. Okay, so this 2,800 will be considered as your reversal. This will be taken as reversal. However, but again here the issue is so this whole will reverse. Got my point? Let's move on to next example. There we'll find what happens. Suppose, for example, I'm moving to next option here. Oops. Okay. In this case, again, one more variation is made, and one variation is that a part of installment has been paid out. We are not continuing with $1,000 as outstanding liability. We are having now 400 as outstanding liability. Are still not due for payment. It means it is still outstanding in your books. It is appearing in our books. In the first year, in 20x2, at the end of 20x2, what we did? Because we are having same thing, again, actual borrowing cost was 2,000. Out of exchange loss of 10,000, we adjusted 7,200 as exchange loss, and which was in P&L, and this was 2,800 was borrowing cost, which we capitalized with this. Fine. Now in 20x3, in 20x2 only we paid 600. So in 20x3 we are having now $400. $400 into interest calculated at 4%, and the closing date is 44. So your actual borrowing cost comes to 400 into 4% into 44 rupees is equal to 400 into 4% into 44. 704 rupees. This 704 is your actual borrowing cost for 20x3. This is the actual borrowing cost. What was the difference in the exchange loss or exchange gain? Now 40,000, we borrowed 40,000 rupees in currency. If we would have borrowed, हमने अगर 40,000 ही बस किया, 40,000 ही हमने borrow किया होता function currency in rupees we would have borrowed. What would we have done? Out of that, 60% we have repaid and 40% is in account. So what would be 40% of this value? 40,000 into 40%. 16,000 is still outstanding in your account. So 16,000 will consider 16,000 loan, 12%. What would we have done? 16,000 पे 12% से Indian rate पे हमें borrowing cost कितनी incur की होती है? हमने 1920 की होती है. तो this और हमें exchange loss कितना हो रहा है? 200 rupees पे. In exchange loss which we are incurring here is in fact exchange gain, because 50 से 44 आ रहे हैं, there is an exchange gain. There is an exchange gain. So exchange gain into 50 minus 44. Again 6 rupees. 6 rupees into 400. We are having exchange gain of 2400. This is exchange gain of 2400. Out of 2400, we have to check out the previous years with this 2800 which was credited. How much we have to revert that? We cannot say that since our exchange gain is less than 2800, then again it has to be taken. We have to find out 2800 में से 40% कितना था. This 2800 adjustment to interest element in the previous year out of exchange loss is for whole 40,000 rupees. Okay, for whole $1,000 it was. But out of that $1,000, 600 we have paid out. We are only having $400, and for $400 we have calculated the exchange gain. So we cannot revert this 2400 in total. We have to find out, we have to revert the proportionate amount only. Proportionate amount means out of this 2800 of 40%, which we are still having in our account. This is 1120. Out of this 2800, 60%, 40%. Let me change the color first. Okay. This 28, 60, 100, 40% is coming 1120, and this is 1680. 1680 was on account of $600 which had already been paid. 1120 is on account of $400. So we will be comparing this 1120 with 2400. So we cannot revert complete 2400 back. It is only 1120 which will be reverting back. So what we are going to do is, your actual borrowing cost will be 704, and this will be reduced from your cost which you have previously recognized or capitalized. Fine. Hope this is clear how you got 1120. This 2400 is for 40%. So we have to reduce only to an extent of 40%. We have to revert to an extent of 40% only. So reversion of 40% will be, we have to calculate out of 2800 how much is 40%. So 40% is 1120. So we can revert to an extent of 1120. We cannot revert total 2400. So this is the complication, third complication which we are having this particular question. Hope this is clear. Vidula, Jay, Srinidhi, Manikandan, all were participating. They were giving answers also. So I would like to understand. We hope this concept is clear. This is quite tricky, but you have to consider. It involves good number of calculations, but logic is very clear. You have to account for exchange loss only when it is real exchange loss. It does not have any hidden interest element. Hidden interest element where you have to consider, but hidden interest element should be to an extent of exchange loss. It should not be any notional hidden element, interest element. That's why we have to restrict it to the extent of exchange loss. When we are reverting, again we have to see to an extent of previous year recognition of adjustment of interest, that only we can revert back. We cannot go beyond that. Simple logic that has to be considered. If you just go through that immediately, I'll just try to explain in Hindi also. पिछले साल में आपने जितना इंटरेस्ट एलिमेंट निकाला एक्सचेंज लॉस में से एक्सट्रैक्ट किया और उसको एडजस्टमेंट ऑफ प्रॉफिट एंड एडजस्टमेंट ऑफ इंटरेस्ट एलिमेंट माना और आपने बोरोइंग कॉस्ट मान के से कैपिटलाइज किया, उतना ही एक्सटेंट का आपको रिवर्ट करना है. लेकिन वो भी तब जब वो पूरा बोरोइंग भी आज की डेट में खड़ी है. जो आपने आज की डेट में गेन निकाला है वो गेन उस पूरे टोटल अमाउंट के लिए है कि उसके कुछ प्रोपोर्शनेट अमाउंट के लिए. अगर टोटल अमाउंट के लिए है तो आप जितना भी एक्सचेंज लॉस आपने इन नेम ऑफ बोरोइंग एडजस्टमेंट टू बोरोइंग कॉस्ट किया था उतना आप रिवर्ट कर दीजिए, अगर उतना अमाउंट बराबर है तो, या उससे ज्यादा है, लॉ एक्सचेंज इन आपको ज्यादा है तो आप एक्सचेंज लॉस के लिमिट तक का, मतलब जितना भी आपका एक्सचेंज एडजस्टमेंट इंटरेस्ट एलिमेंट है उतना रिवर्ट करेंगे। अगर आपका कुछ पार्ट में आपने पेमेंट कर दी है तो जितना परसेंटेज आपका बैलेंस बोरोइंग्स बची हुई है उतने ही परसेंटेज का ही आप रिवर्ट बैक कर सकते हैं, वो भी एक्चुअल जितना आपने लास्ट ईयर में निकाला था उतने से, उससे ज्यादा नहीं कर सकते ना रिवर्ट। अगर आपने पिछले साल 10 रुपए का आपने इंटरेस्ट माना था और इस साल आपको 15 रुपए का बेनिफिट है तो आप 15 रुपए नहीं कर सकते, अब तो 10 रुपए का ही आपको रिवर्ट करने का ऑप्शन मिलेगा ना, मोर देन दैट यू कैन नॉट रिवर्ट इट बैक। So this has to be taken care. Now question, Sairam has asked question, okay, ma'am, but balance amount loan is increased in rupees. The increase that amount where should be recorded? Exchange gain on it. Even as per your Ind AS 21, any borrowing which you are taking in, you have to record it at your fair value or your exchange rate, whatever it is, high or less. If it is your increase, that increase has to be there in your exchange gain, but not on account of your borrowing cost. Here, what we are talking about is that how much to be taken out to be debited to your cost of the asset and how much to be reverted from that cost of the asset. Exchange gain, yes, there was an exchange gain of 2400. Out of that 2400, 1120 will be reverted back and remaining will be credited to your profit and loss account as your exchange gain. So 2400 minus 1120, good question, 920. Good question. This was asked by Sairam. So Sairam, yes, you are right. 920, which is your actual gain, actual exchange gain, which you have not reverted, that will be credited to your P&L account. But 1120 will be reverted from your cost of the asset. Fine. Balance exchange in after reversal credit to PS. Jay, you are right. You answered it correctly. So let's move on to next note. That's what I've already explained you. Any unrealized gain will be reverted back to the extent of exchange loss as an adjustment, which was as an adjustment. Moving to next. Okay, now we are talking about qualifying asset. Till date, we were understanding what was borrowing cost. Borrowing cost included three elements. One was your borrowing cost included three elements. One was your interest expense, which was based on your effective interest rate as per Ind AS 109. Interest in respect of lease liabilities, which was accounted as per Ind AS 116. And third was exchange expenses, which we discussed in detail with the help of 3-4 examples with different situations. Similar illustration, there is illustration given, which is a homework for you, illustration 5. This is also on the treatment of this foreign exchange differences. So that is to be done by you. I have explained all the examples in detail with full calculations so that you are able to understand it. So let's move on to the second definition, which is qualifying asset. What is qualifying asset? Qualifying asset is an asset that necessarily takes a substantial period of time to get ready for its intended use or sale. So it means it should not be an asset which is ready for use immediately. You cannot consider it for use immediately. It must take some substantial period of time to get ready for its intended, because for that period your interest will be there. If you bought an asset immediately, you bought an asset and use it immediately, it is ready for use immediately, so you are not incurring an interest cost, because interest is an expense incurred over the period of time. Fine. So what are qualifying assets? Standard has given some examples like inventories, manufacturing plants, power generation. Inventories, manufacturing plants, power generation facilities. Facilities means basically your factories or your plants where these power generation is done. Intangible assets, investment properties, bearer plants. These are your qualifying assets. And what are not included in qualifying asset is assets ready for its intended use or sale. When acquired immediately, if it is ready for use, then it will not be considered as qualifying asset. Financial assets, this is important. Financial assets and inventories that are manufactured over a short period of time in large quantities. In large quantities, in a repetitive basis, that will not be considered as your inventory. So inventories that are manufactured over a short period of time. basically those inventories will not be considered as your for qualifying asset because you need substantial period of time. This substantial period of time is not defined in the standard. In your accounting standard 16, which you have studied in your intermediate, yes, there it was defined. It was defined at say for a year, or any reduce of period will also be considered as substantial period of time if an entity decides. However, in your Ind AS 23, there is no further description or explanation for this substantial period of time. It is purely on the judgment of the entity that whether this asset is taking substantial period of time in construction or not, or for they're ready for its intended use or not. So it depends on the entity. So in such a situation, under Ind AS 23, substantial period of time may be more than 1 year, maybe less than 1 year also, maybe few months also, depending on the entity and their judgment. Fine. Next is examples. What are the examples of qualifying asset? We have already studied inventories, manufacturing plants, power generation facility. This is not the exhaustive list. This is an inclusive list. There may be some other assets also which may be considered as your qualifying asset. Financial assets are not your qualifying assets. Assets that are ready for intended use when acquired are not qualifying. What are the assets that are ready for use when they are acquired? Can anybody give me an example? Manikandan, Sindhi, Jay, Sairam, Vidula. Please come out with an example. What are the assets that are ready for their intended use immediately when you acquire it? I would like to know from you all any guess you are having, anything which is in your mind, which you feel these are the assets which are ready for use immediately when you acquire. I'll wait for a minute. I would like to have a reply from you all. Please go with these slides very carefully. I'm going to test you all through MCQs. Still waiting for a reply. Okay, got it. First, Sairam is saying yes, laptop, machinery. Jay is saying raw material, traded goods, laptop. Yes, very good. Land. One more example. Laptop is good, machinery is good. Raw material or traded goods. Traded goods basically inventories that are not acquired. Funds are basically not for use for this. Yes, that is ready for use. They immediately you purchase and trade. That's why they're traded goods. Basically, here we talk about manufacturing items. Raw material, when used for your manufacturing, they turn into your finished goods. So raw material exactly will not be considered as qualifying asset here. Assets that are ready for the intended use is also land. Any land which you buy, that is always considered as ready for use. But when you have a project in that you are the overall project, your project is you bought a land. This is always considered as ready for use. But your project is to build a building on this land. In that case, you have to consider this project. You won't consider land individually. Okay, land individually is not your qualifying asset. It is always considered as ready for use. However, project is to build build a facility over that land and a manufacturing facility over that land and to use it for your production purpose. So the construction of that building overall on that land will be a project. In that case, land will also be considered as a qualifying asset. Individually, land is not a qualifying asset. If you are borrowing any fund only for acquisition of land, then that land is not a qualifying asset. If you are borrowing funds for a project and that project includes acquisition of land and constructing a building over it or manufacturing facility over it, then in that case, land is also a qualifying asset. Please consider this. This is very important. And mind you, I'll tell you in your GFRS paper, this current attempt, which was your December 2021, there was a question on this. They were having any convertible, they were issued their convertible debentures or convertible bonds, and those the proceeds from those convertible bonds was used for acquisition of for a project purpose, for expansion of the project. In that project, they purchased a land, and on that land they constructed a facility. What was the difference is that that fund was used for the project. In that case, land is also a qualifying asset. However, if it was mentioned, like for in your example, I would also like to give you an example for Ind AS 16. If you have studied from your previous faculty, in Ind AS 16, you are having one example, I think illustration 12 or 13. Big computation question is that there it is that land is immediately used, ready for use, and it is not a qualifying asset, because in that question it was clearly mentioned that borrowing was used, you had a specific borrowing for construction of building, not for the whole project, not for acquisition of land. Borrowing was for construction. So there we have not capitalized the borrowing cost on acquisition of land, any fund used for acquisition of land. However, in that particular question, we have capitalized the borrowing cost for the fund which was used for construction purpose. Here, if we are borrowing a fund for a specific project, in that case, if land is also acquired, then land will also be a qualifying asset. If you are borrowing a fund only for construction of the building over the land, then definitely land is out of the purview, because your borrowing was not meant for acquisition of land. If your borrowing is for project, and in out of the one of the pro step in that project was acquisition of land and then construction, in that case you have to consider land also as a qualifying asset. Hope it is clear. I have given you a practical example which appeared in your examination. This appeared in your GFS examination. Such type of question may also be asked in your financial reporting paper also. So be very careful, be very distinctive about this. What is the nature of the loan? What is the purpose of the loan? That will define the nature, specific borrowing, general borrowing, or utilization of fund that is necessary. Fine. Let's move on next. Okay. Again, we are coming with illustration. What is this qualifying asset? A company deals in production of dairy products. It prepares and sells various milk products like ghee, butter, and cheese. The company borrowed funds from bank for manufacturing operation. The cheese takes substantial longer period to get ready for use. So it means substantial period of time is, we studied this for qualifying asset. This is necessary for substantial period of time it should take. State whether borrowing costs incurred to finance the production of inventories that have a long production period be capitalized. Now, important thing which we have to consider is that company deals in production of daily products. It means this is done on repetitive basis, and since it is manufacturing, it is an inventory, definitely we can consider it as in large quantities. It is done in large quantities, repetitive basis. However, information one more is given, which is substantial. This is first information, this is second information, this is third information. Based on these first two information, if you remember, we have studied in our scope out. Any inventory which is manufactured in large quantities on repetitive basis, borrowing cost on those inventories will not be capitalized. That has been relaxation given by the standard. So based on that, any borrowing cost which is incurred for the finance which we have taken for the production of such inventories, borrowing cost will not be capitalized. However, I told you at that time also, if an entity identifies that this is the amount of borrowing cost which can be allocated to such inventory, and that inventory takes substantial period of time, then entity may capitalize the borrowing cost. So in such a situation, there is two options with the entity. If they want, they can avoid capitalizing the borrowing cost. If they want, they can do it on this basis, since it is taking substantial period of time and borrowing costs can be allocated, identified and allocated to it. So this is we have to take care. The choice is with the entity. If it is possible, they can go with the second option also. Fine. So in standard, it is not necessary that you have one answer. There may be option that you have two answers. There may be two different possible answers. There may be difference of opinion. So there's no right or wrong. This is difference of opinion, or there may be possibility of two different answers. Okay, so here in this solution, there is possibility of two different answers. One is because there is a scope out clearly of large quantities on repetitive basis. So it means some entity is exempted to capitalize the borrowing cost. However, because it is taking substantial period of time, if entity, one assumption we are adding from ourselves, if it is one period, if we are adding one assumption that if it is possible for an entity to allocate, the borrowing cost to this those inventories, then we can capitalize it. Fine. Please, may I know whether cash can be considered as an asset ready to use? Cash is an asset ready for use. It is always ready for use. It will never be a qualifying asset. Cash is an asset. You show it on your balance sheet. Definitely cash is an asset, but it is always ready to use. Definitely it is always ready for use. Its fair value and the carrying value is always same. One more information I'm just adding to you. Cash, the fair value of cash is equivalent to the carrying value. 10 रुपए का नोट है तो 10 रुपए ही वैल्यू है उसकी, तो मार्केट में भी 10 रुपए की वैल्यू होगी। ऐसा तो है नहीं कि आप 10 रुपए लेके जाओगे तो मार्केट में जाके वो 9 रुपए माना जाएगा, है ना, तो या फिर 12 रुपए का माना जाएगा। तो 10 रुपए फेयर वैल्यू भी सेम होगी, कैरिंग वैल्यू भी सेम होगी, हमेशा रेडी टू यूज है। आप इमीडिएटली जाके इसका पर्ची कुछ भी ले सकते हैं ना। ओके, fine. We are moving to next illustration. A company is in the process of developing computer software. The asset has been qualified for recognition purposes. However, the development of computer software will take substantial period of time. Here, what we are talking about is software. Qualified for recognition purpose, it means it has reached to your development stage. It is process of developing computer software means it is internally generated. And we are, since it has qualified for recognition purposes, it has reached to development stage. Development of computer software will take substantial period of time to complete. This is important for substantial period of time to complete. Can computer software be termed as qualifying asset under Ind AS 23? First thing which we mentioned was Ind AS 23 is applicable for all kind of qualifying assets: property, plant and equipment, your intangible assets, your investment property, any asset which takes substantial period of time to for its intended use or sale, and that asset is measured at cost. In such a situation, borrowing cost standard will be applicable. So here, yes, because it is to be measured at cost, it is a development process computer. We are not measuring it at fair value. We may go for check impairment testing. We may go for whether it is recoverable value is more or less. That is different thing. But as of now, where you are recording it as cost. So Ind AS 23 will be applicable at this. Is management intention considered when assessing whether an asset is a qualifying asset? Yes, management should assess whether an asset at the date of acquisition is ready for its intended use or sale. This can be understood from this that is qualified for recognition purpose. When an intangible asset is qualified for recognition purpose, when you feel that yes, economic resources will improve from that, in future economic resources will improve from those utilized by using those assets. So management intention is to be considered. Okay, whether it is an asset or not, it is a qualifying asset or not. So yes, management intention should also be assessed or should be considered. Sometimes it happens that asset is used individually or asset is used in combination with some other assets also, like cash generating units, which we have studied in Ind AS 38. So there, or in 36. So if an asset is used in combination, then the decision by the management is to be taken in whole. If asset is used individually, then decision of the management is to be taken individually for particular asset. One question Sairam is asking, can you explain the inventory related borrowing cost? Inventory related borrowing cost, the illustration I guess you are asking for the illustration which was related to that cheese. I'm just telling you again, any borrowing which we have taken for manufacturing inventory, and that inventory takes short period of time for manufacturing. In that case, it will not be considered as substantial period of time. In those inventories will not be considered as qualifying asset. And when it is not considered as qualifying asset, to any fund which we have used to manufacture such kind of inventory, borrowing cost on those will not be capitalized because it is not a qualifying asset. However, if you have taken fund on manufacturing of inventories which takes substantial period of time in manufacturing, and that is on a repetitive basis, large quantities, then also you can exempt capitalizing the borrowing cost. However, if any inventory is taking substantial period of time, for example, wine takes substantial period of time. It takes 2 years to mature, or every year, with every increase in the year, the maturity level of that wine increases, the value increases. In that case, any fund used to prepare that wine, that may be interest cost on that may be capitalized. So inventories, you have to check it out whether it is a qualifying asset or not. If it is a qualifying asset, what nature of manufacturing it is, whether it is in repetitive basis, it is in individual, it is take times. It is not on repetitive, it is in repetitive basis, but you can identify the borrowing cost allocated to that, and that inventory is taking substantial period of time, then you can capitalize it. So basically, exemption is for which takes short period of time, and which is in large quantities on repetitive basis. Okay, those two types of inventories or borrowing costs incurred on those inventories will be exempted. You are not required to capitalize it. However, if we can allocate it based on if those large inventories which are taking large time or large quantities, but they take substantial period of time, then there is probability or possibility entity has a choice to capitalize or not based on they are able to allocate borrowing cost. It should be directly attributable cost. That is also one of the important things which we have studied there. Asset should be qualifying के लिए जरूरी है कि substantial period of time हो. दूसरा ये है कि directly attributable cost भी होनी चाहिए. There should be directly attributable cost. If an entity is not able to directly attributable any borrowing cost to that particular qualifying asset, then in that case it will not be capitalized. So both the elements have to be satisfied, both the conditions have to be satisfied at the same time. Fine. Next illustration, a telecom company has acquired a 3G license. The license could be sold or licensed to a third party. However, management intends to use it to operate a wireless network. Development of the network starts when the license is acquired. So borrowing costs on the acquisition of 3G license be capitalized until the work is ready for it. Here question is that since it has alternative ready to use options, the license can be sold immediately. We can fetch money out of, we can have that economic resource out of that, or that license can be licensed to a third party. However, management is intending to operate it for a wireless network, and that wireless network, they need time to build it, construct that wireless. So, if you remember, one of the conditions was it takes substantial period of time ready for its intended use or sale. So, management's intention is for operation of for use it to operate a wireless network. So this intention is important. Alternative scope that this license can be used in this manner or can immediately be sold or licensed, it is immaterial. It is not required. What is required is intention. In the previous question also we said management assessment is considered or not. Yes, management's intention, management's assessment is considered. Management intention is to use the telecom license to operate a wireless network. So this is a qualifying asset, and any borrowing cost incurred on that will be capitalized. So should borrowing cost on acquisition be there? Yes, because management intention is not to immediately sell it. It is to operate for a wireless network, and that operation of wireless network, wireless development of that wireless network will take time, substantial period of time. So cost of that will be considered as borrowing cost will be capitalized here. Okay. Next question. Okay, one question I have received. Certain spices and pickles. Vidula is asking, certain spices and pickles also take substantial period of time to sale. Then will they be classified as qualifying assets? See, Vidula, in case those assets value of that asset is increased because of increase with over the period, then definitely borrowing cost on such assets will be capitalized. However, you have to tell me which spice, because in general all the spices are ready for use. If you are in some spices and pickles may be there, but pickles also does not take that substantial period of time. Pickles are ready after 4 or 5 days to ready for eat. It depends on the taste also. Person to person, the taste varies. Some likes to eat it immediately after 2 or 3 days. Some likes to get it more soften and then to use it or consume it. So it is person to person, not because of pickle. And pickle takes 4-5 days, or say if it is lemon pickle, it will take 10-15 days. It will not be considered as your substantial period of time. And also one thing is that it is in repetitive basis, in large quantities it is manufactured, it is prepared. So again, borrowing cost capitalization is exempted for that. Okay. In case you want to know for a particular spice or pickle, you have to mention that. Otherwise, in first glance, it appears that it will not be considered as a qualifying asset. However, it depends on the spice or pickle. Okay. Now, Jay is asking whether substantial period means more than 1 year. See, accounting standard 16 borrowing cost defined substantial period. In fact, I cannot say defined, it was explained. And there also their scope was given. In general, it was more than 1 year. However, if entity chooses, your substantial period be less than 1 month, less than 1 year. However, in Ind AS 23, no such explanation is given. So here it is completely based on the judgment of the entity. If entity says that it is taking substantial period of time, then you have to act accordingly. We are not going to argue whether it is a substantial period of time, this assessment is correct or not. We are based on that assessment, we have to define whether this borrowing cost is to be capitalized or not. So in such a situation, substantial period of time can be less than 1 year also. Okay, depending on the function of the organization, of the entity. Okay. For example, there are certain entities which are very seasonal based. So the substantial period of time is season. They cannot be an year. Okay. Okay. Srinidhi is asking, ma'am, whether the license could be sold is not intention to sell. No, here it was not intention to sell. This is the possible alternative usage of that license. It is not the intention of the management. Intention is to use it to operate a wireless network. We have to see the facts. We have to check the facts very carefully. Alternate use of the license. If I am having a building, I am having a house, I can renovate it as your shop. I can renovate it as, I can give it to tenant. I can stay in, I can pre-occupy it. It can be an owner occupied property also. It can be rented out also. It can be rented out to a family, it can be rented out to businessmen. So different alternative uses are there, but what is your intention to use, that will count, because that will tell you how it is to be used, intended use or sale. That is what is mentioned in the question. Sorry, in the standard. So the license could be sold is the alternative use of that license, possible use of the license, but not the intention of the entity or the management. So there's difference between both the things. Hope, Srinidhi, I'm clear? Okay, let's move on. In case you have any query for the previous illustrations which we have discussed, you are most welcome. Please do ask it. I just tell to my children also, I'm telling to you also, you all are my children. So just listen well. In case you have a doubt which you feel it is very silly, to be very true, it is not silly. It is very much required to be asked, because once you may feel sound silly, but for always you'll always have an answer, and once एक बार आंसर मिल जाएगा तो हमेशा के लिए आपको वो ज्ञान मिल गया, फिर वो आप कभी उसके लिए सिली नहीं रहोगे। एक बार ही तो सिली रहोगे, लेकिन पूछ लोगे ना तो वो आपके लिए एक बार उसी पॉइंट पे खत्म हो जाएगी बात ना। So it's always welcome. Please ask it. Any single small silly doubt which you feel कि people may laugh, don't hesitate. I'm not going to laugh, and I'm going to seriously take your query and I'm going to reply it. Okay? Let's move on to the next one. A real estate company has incurred expenses for the acquisition of a permit allowing the construction of a building. It has also acquired equipment that will be used for the construction of various buildings. Okay, after this, now we'll take a short break. If you all want, you just let me know after this illustration you want a break or not. Let me first complete this illustration. A real estate company has incurred expenses for the acquisition of a permit allowing the construction of a building. It has also acquired equipment that will be used for the construction of various buildings. Can borrowing cost on the acquisition of the permit and the equipment be capitalized until the construction of the building? So here the question is with respect to two things. One is acquisition of the permit and one is acquisition of the equipment. With respect to permit, a real estate company has incurred expenses for the acquisition of permit allowing the construction of building. So this permit is acquired for construction of building. So this is related to this construction of building. So it will take substantial period of time for construction. Okay, so when there is substantial period of time in picture, then there is a qualifying asset. Yes, borrowing cost on that will be capitalized. Second part was it also acquired equipment that will be used for the construction of various buildings. It means this equipment is ready for use. It can be used for the construction of this building also. It can be used for construction of that building also. This equipment is ready for use. When the equipment is ready for use and can be used for any building and construction of any building, then in that case it is not a qualifying asset. So any cost incurred for borrowing by acquiring that equipment will not be capitalized. Hope this is clear. Here, no substantial period of time, or we can say ready for use. So, no capitalization of that borrowing cost. Here, yes, so capitalization of clear? Okay. Okay. Srinidhi is also saying and Manikandan is also saying they need a break of 5 minutes. So next, after this illustration, we were moving to the next topic, recognition. So let's take a break of 5 minutes. Right now it's 8:32. We'll come back at 8:40. But be sharp at 8:40 because I'm moving bit slow. It appears that I may take more than my session may extend after 10. So not to waste much of the time, we'll come back at 8:40. Okay. Okay, I'm sharing my screen. So students, welcome back. Hope you are back. Just give your thumbs up that you all have come back. Let me see. You should not miss any of the part of this session. Just give your thumbs up that you are there. So we'll be moving with next step, which is recognition of borrowing costs. Right now, we have checked out what borrowing cost includes. But now we have to understand what borrowing cost should be recognized and when it should be recognized. Period of time and also when it should be recognized. Recognition. Now we are discussing recognition. Borrowing cost, what we understood, right till now, what we were discussing was definition. Borrowing cost, definition of borrowing cost, definition of qualifying assets. Yes, all are present. Good. So now we'll be discussing recognition of borrowing cost. Till now, we discussed the definition of borrowing cost, definition of qualifying assets. What we understood, what is borrowing cost, what are the elements used in borrowing cost, which is included in the borrowing cost. Now we'll consider can we recognize the borrowing cost or not? So when should we recognize the borrowing cost? Cost should be recognized when it is directly attributable to the acquisition, construction, or production of a qualifying asset. Qualifying asset. Borrowing costs are capitalized when below two conditions are satisfied. It is probable that it will result in future economic benefits to the entity. This is very important. If any borrowing cost which you are incurring for a particular asset, that asset is going to result into future economic benefits, and borrowing costs can be measured reliably. One more thing which is also important is that you have to actually incur that borrowing cost. If you are not actually incurring that borrowing cost, it will not be considered for recognition purpose. Here, what is important is to consider is incurred, not paid. That is the reason why, if you remember, what we have included in the borrowing cost was interest in the lease liability, included in the lease liability. That is the finance cost which we incur. That is not paid. Maybe the paid cost is different. Or for example, when you are considering your interest element under Ind AS 109, actual interest which you are paying out and what the finance cost which you are calculating may be two different things. But that is the reason the term used here is incurred and not paid, but it should be actual. Some places your actual and incurred will be same, paid and incurred will be same, and some places it will be incurred. So, but you have to incur the borrowing cost. Then only you can think of recognizing it. Okay. Sometimes, like I told you, if you remember, I discussed about the notional interest. Any fund which you have not borrowed, it was your own fund, you are having surplus with you, and you utilize that fund in constructing of any asset, qualifying asset. So you cannot assume that if I would have not used it, I would have invested somewhere, I would have earned interest. So that interest ka na aana bhi ek prakar se kharcha hona hai. You cannot think in that manner. Something which is not coming is also an expense for you. So that will be notional interest. That cannot be capitalized. So be very careful. It should be actually incurred, not actually paid, actually incurred. Fine. So that cost can be measured reliably. You should be knowing at what rate you have to measure it. In case of specific borrowing, in case of general borrowing, there will be different measurement criteria. And it will also result in future economic benefits to the entity. Now, what happens if we are recognizing borrowing costs? We have to see on what was the nature of borrowing. You have borrowed what was the nature of borrowing? You have borrowed any fund which was specifically for construction of any specific qualifying asset. Then that borrowing is called specific borrowing. And when it is a specific borrowing, calculation is very easy because whenever you borrow a fund, you borrow with defined interest rate. So that interest rate is to be used to be applied on that fund for that particular period of time, and you'll find the borrowing cost which is to be capitalized. However, it is not the case everywhere. In case of large entities, they have departments for everything. They have departments for financing also. So the finance is generated, centralized by one department, and that fund is allocated to different departments for different use. So in that case, it is very difficult to define that this borrowing is meant for this particular asset, this borrowing is meant for this particular asset. So in such a case, that borrowing is called general borrowing. And when that is a general borrowing, so it is combination of many borrowings. And when it is a combination of many borrowings, so every borrowing has different interest rate. So we have to come out with one interest rate, which is called capitalization rate as per the standard. We have to come out with one capitalization rate, and that capitalization rate is to be used for computation of borrowing costs to be capitalized. So what we came out with this discussion is that there are two types of borrowings. Specific borrowings and general borrowings. In specific borrowing, interest rate is defined. In general borrowing, we have to compute. What we have to compute is capitalization rate. Reason I told you why we have to calculate the capitalization rate. Hope it is clear to you all. Okay. First of all, let's discuss about specific borrowing. What happens in specific borrowing? For example, you are borrowing fund. You have taken a loan of say 20 lakh rupees. That loan was taken for a specific qualifying asset. Now, obviously, construction will be in gradual manner, in gradual pace. What will happen? Right, in first phase, you'll be incurring, say, for 5 lakh, you are incurring, and 15 lakh is spared with you. After 3 months, again, you need a fund. So out of that 20 lakh borrowing, 5 you have utilized in the first quarter. Again, another 7 lakh you are utilizing in the second quarter. Still, you are left with some fund. So rather to waste that fund unutilized, keeping it ideal, what entity do is that they invest it somewhere temporarily. That investment is not for long run. It is for say 3 months. You feel that after 3 months you'll be requiring 7 lakh rupees, or after 3 months you'll be requiring remaining 15 lakh rupees. So what you will do is that you'll invest that money for 3 months for short term with certain rate of interest, and you'll be earning some interest income. So while capitalizing the borrowing cost, in case of specific borrowing, I'm talking about specific borrowing. So everything is to be thought about, to be understood with reference to specific borrowing here. So in case of any interest income which you are earning through those temporary investment will reduce the borrowing cost, will reduce the amount of borrowing cost. So for example, if you have, I should have taken one blank PPT here. Just a minute. Let me create one blank PPT here. Okay. See, in case, for example, you have borrowed 20 lakh rupees at the rate of, say, for sake of convenience, we have borrowed at rupees 10%. So this is the amount which gives you a borrowing cost of rupees 2 lakh for 1 year. Okay. Now you are utilizing this borrowing cost in different phases. Say in quarter wise. In first phase, you are using 5 lakh. In second phase, you are using in first phase you are using 5 lakh. In second phase, you are using 7 lakh. And then third phase, you are using 3 lakh. And again, in last phase, you are using 5 lakh. Okay, so it comes to 20 lakh rupees. What happens that when you are using 5 lakh, your ideal fund is 15 lakh. What to do with this? So what will we do that? We will invest this 15 lakh. Entity generally try to maximize their return from every point. Na? So they will invest this 15 lakh somewhere. Say for example, at the rate of, again say 20%. Say for 20% they invested it. So from this 15 lakh they are incurring, say for 5%. Okay. So from this 15 lakh when they are investing it, however, they won't invest this 15 lakh for a year, because they knew that they have to they need money after a quarter. Okay, so they will invest it for 3 months. So from this 15 lakh, they'll be incurring, they will be getting 5% interest for 3 months, which comes to rupees 18,750 rupees. So when you will be capitalizing this borrowing cost of 2 lakh rupees, you will reduce this borrowing cost with this 18,750 rupees. Fine. And you'll get whatever amount comes, that will be your borrowing cost to be capitalized. Hope it is clear. Now, in case after using 7 lakh, again, you are left with some fund which is ideal. Again, you reinvest it. You get interest on that for another 1 quarter. That income will also be subtracted when you are capitalizing it. This is one point to be considered. Second point which you have to consider here is that even if you are incurring 5 lakh expenditure for the first quarter, so you will not be capitalizing the interest on 5 lakh rupees. You will be capitalizing the interest for this whole 20 lakh rupees. This is a difference with specific borrowing and general borrowing. In general borrowing, we have to take care what is the expenditure we have done. And based on that expenditure, we have to calculate the borrowing cost. However, in case of specific borrowing, we completely go with the amount which we have borrowed. Total interest on that borrowing for that particular period, reduced by any income from temporary investment, will be capitalized irrespective of the amount of expenditure you have made out of that borrowing, or amount of expenditure you have utilized, or amount of fund you have utilized. Irrespective of that, you have to consider it. Hope I'm clear. Point is clear or not? So you won't be doing that. You have to calculate. This is the right way. That is the reason why we are talking about temporary investment, because we are calculating interest on whole amount. If we would have calculated interest on only 5 lakh rupees, say 5 lakh पे आपने 10% से निकाला और आपने कहा कि हमने तो 5 लाख रुपए ही यूज किए हैं, we have utilized only 5 lakh rupees, so just capitalize the interest on those 5 lakh rupees only, which comes to 5 lakh. That is wrong. In case of specific borrowing, you have to check what is the total borrowing. That is the reason we have come with this provision reduction of income from temporary investment, because we are considering the total borrowing. We are not considering the fund utilized out of that total specific borrowing to the qualifying asset. Clear? Hope it is clear. Any question on this? Please ask, otherwise we'll move to general borrowing. Manikandan, Srinidhi, Vidula, Jay, Shriram, Sairam, sorry. Shall we move ahead? Masking, I'm still waiting for the reply. Okay, understood now. Vidula saying understood, Srinidhi, Shaina, clear. Okay, now we two things which we already, any notional interest will not be capitalized, actual incurred will be capitalized, and actual borrowing cost incurred may be equal to paid amount or may not be equal to paid amount. That you have to check based on the scenario. Okay. In case of Ind AS 109, there is possibility that it will be different to what you are paying. In case of your lease liability, incurring amount will be there, maybe there is no paid amount. Okay, so there are different cases. Now move on with one illustration on specific borrowing, then we'll move with the general, we'll discuss the general borrowing. Alpha Limited on 1st April 2021 borrowed 30 lakh rupees at the rate of 9% to finance the construction of two qualifying assets. Construction started on 1st April 2021. The loan facility was availed on 1st April 2021 and was utilized as follows with remaining funds invested temporarily at 7%. So it means they borrowed 30 lakh in total on 1st April 2021, but they are not utilizing it immediately. All 30 lakh is not being used in one go. They are using first 15 lakh and then they are using another 15 lakh. Okay, after 6 months, they are using another 15 lakh. So what we have to do is that from 30 lakh, fine, 30 lakh, interest rate is 9%. Calculate the borrowing amount on this. So you get at the rate of 9%, your interest comes to we have to identify in a different manner because there are two different assets here. So we have to capitalize it in two different manner. For different assets, we have to capitalize different things. We'll do it in different manner. Just a minute. Here we have two assets. One is factory building, and another is office building. Right? Fund utilized for office building will be 20 lakhs and fund utilized for factory building will be 10 lakh in total. It is clear? This is 10 lakh and this is 20 lakh. It is clear or not? Now, interest at 10 lakh will be 90,000. Interest at 20 lakh will be 1,80,000. This is to be capitalized. For whole year, you are using the fund. Fine. Your construction will complete on, say, it is not mentioned here. In case it is mentioned, construction starting period is mentioned, nothing is mentioned. So we are assuming that construction is there till on 31st March. Construction either has not been completed or completed on 31st March. Okay. So we are computing interest for the whole period. However, there is temporary investment also. What was the temporary investment? The temporary investment was 15 lakh rupees, out of which 5 lakh was allocated for, which was to be allocated to factory building, and 10 lakh was to be allocated to office building. So 5 lakh pay 7%, your less, this is total interest cost, and this less interest income. This kindly excuse me for my writing. I'm not used to with pen, this digital pen, so it is just creating haywire. Interest income. Interest income for 5 lakh for 7% comes to 35,000. So this 35,000 for 6 months. One more thing is to be included. 5 लाख को आपने कितने महीने के लिए इन्वेस्ट किया है? क्योंकि आपको तो अक्टूबर में ये फंड चाहिए था. You require that fund in October. So it means your investment is only for 6 months. So 7% for 6 months you invested it. So it should be further divided, and your interest, this 17,500 will reduce from here, and similarly here it will be 35,000. Help me with your calculations, please. You gave, sorry, I haven't missed. Why, Jay, why are you mentioning 72,500? Okay, you are giving me the total figure after this. Okay, fine. 72,500 is the amount which will be capitalized, and 1,45,000 which will be capitalized for office building. Good, very good. It means it is clear for both of you. Even Vidula, you have also answered. You have answered, I guess, for interest income to be reduced. Fine. Thank you. Both of you were right, and hope others have also calculated it correctly. So I presume that this is understood to you. Okay. We'll move on to next part. Borrowing costs eligible for capitalization in case of general borrowing. See, what we discussed earlier was specific borrowing. In that case, we were not bothered what has been expensed, in what phase it has been expensed. But in case of general borrowing, that is not the case, because general borrowing means borrowings from different sources with different rates. So if we calculate interest on total borrowing, it will go to huge amount, and that amount for every asset, and from that total borrowing we have constructed so many qualifying assets. So in such a situation, if the total amount is capitalized for every qualifying asset, it will be a destructive figure. It will not be correct figure. It will be overvalued. So it is very necessary here to consider what is the expenditure we are incurring for that particular qualifying asset. That we consider as the amount on which we have to apply the capitalization rate. Now, because borrowings are at different rate, it may also be happen that it has been borrowed at different point of time. It may happen some has been borrowed on 1st April, some may have been borrowed at 1st June, some may have been borrowed at 1st September or somewhere else, or in the mid of the month. So period is also different. So we have to calculate the weighted average. Weighted average is the correct way of measuring such type of borrowings. Okay, so capitalization rate will be based on the weighted average of the loan you are taking and the weighted average of the interest you have incurred on those loans. Fine. So first let's understand. Vidula, 6,300. What was 6,300? Vidula, I did not understand. What was 6,300? 72,500 and 1,45,000 was correct. 6,300 I did not understand. For what you have answered it. Okay. Still, I guess now you have understood that question. We have moved forward. Borrowing costs eligible for capitalization. When general borrowings are used for qualifying asset, Ind AS 23 requires that borrowing costs eligible for capitalization is calculated by a capitalization rate to the expenditures on qualifying assets. So there are two parts. One is capitalization rate and one is to the expenditure on qualifying assets. So that I have explained you properly. When specific borrowing remains outstanding after the related specific asset is ready for its intended use or sale, it becomes a part of general borrowing. What happens? I have borrowed a fund of 20 lakh rupees for a qualifying asset. That asset and that borrowing which I borrowed was for 5 years. I have to repay it after 5 years. But however, that specific borrowing was for a qualifying asset which took 2 years for construction. Fine. So I borrowed on 2001, for example, 2021, I borrowed it and I have to repay it on 2026. But say for 1st January 2021, I borrowed and I have to pay it in December 2025. That for the asset which I took that the specific borrowing, that was completed in 2020 at the end of 2022, after 2 years. So after 2 years, I'm still having that borrowing with me. I have not repaid that. So that borrowing after 2 years will be considered as my general borrowing. This is very important. You have to consider when will it be considered as general borrowing. By the time the asset is ready for its intended use or sale. If substantial period of time has been lapsed, that asset is ready for its intended use or sale. After that, that borrowing is if still outstanding, then it will be considered as general borrowing. If you repay it after 2 years, there is no borrowing, no consideration whether it's specific or general. Okay, so it is to be considered as general only when it is outstanding after 2 years. Fine, this point is clear to you. Now next is borrowing cost in respect of specific funds borrowed for the purpose of obtaining a qualified shall be excluded from capital till the time that specific qualifying asset is under construction phase. You cannot consider that specific borrowing to be general borrowing. Fine. The amount of borrowing cost eligible for capitalization is always limited to the amount of actual borrowing cost incurred during the period. It may happen that for different borrowings, you are having different interest rate. So your calculation of interest will be more. But in that case, you have to limit the capitalization amount, and that capitalization amount will be limited to the actual interest which you are incurring on that particular borrowing for that particular period. It may not happen that by because of capitalization rate your amount comes to rupees 20,000 or 20,000 and your actual borrowing was only 18,000 which you incurred. So you cannot capitalize 20,000 because it has been computed on the basis of capitalization rate. You have to restrict it to the actual borrowing cost which you have incurred. Fine. So this is also very important to understand. In short, I have given this for specific borrowings. I have already explained you. Borrowings on case of specific use, expenditure incurred on qualifying asset, interest rate on such borrowing. This here we have assumed that whatever we have expenditures incurred, that was equal to the amount of borrowing. Fine. And in case of capitalization rate, first we have to calculate the capitalization rate, then we have to multiply with the expenditure incurred. Because here borrowings are so many, so we cannot equivalent, we cannot equalize with the whatever the actual amount of borrowing. So here we'll take only the expenditure incurred. Fine. How to calculate the capitalization rate? Capitalization rate, I told you we are using it weighted average because in case of general borrowing, it happens that there are many number of borrowings with different interest rate and they are borrowed at different point of time. It may be that this has one fund has been borrowed at the beginning of the year, one fund is borrowed at the middle of the year, at the end of the year, in the second quarter, in the third quarter, depends on variation may be there. There may be many permutations and combinations, so it's always advisable to use weighted average in such a situation. So weighted average borrowing cost on outstanding borrowings of the entity. Borrowing cost means interest amount. Weighted average interest upon total outstanding borrowings of the period. That total outstanding will be also based on your weighted average only. Okay, in case it is weighted average of total outstanding borrowing, and that too may be weighted average depends on the timing of the borrowing. Fine. Now let's see this with the help of an example. On 1st April 20x1, A Limited took a 8% loan of rupees 50 lakh for construction of a building A, which is repayable after 6 years on 31st March 2000x7. The construction of the building was completed in X3. See, this was a specific borrowing. We have taken a loan for construction. This loan was taken for construction purpose only. It means this is specific borrowing. Okay. However, loan was for 6 years to be repaid after on 31st March 2000x7. But construction completed on 31st 20x3. So after this means took on 1st 4 20x1 till x3 till x7. We have to move here. Okay. By this time it was specific borrowing. From this period to this period, it will be considered as general borrowing. Fine. It will be considered as general borrowing. A started constructing a new building, B in the year 20x3x4, which falls where? Here. He has outstanding general purpose loan of, besides this loan, he is also having a general purpose loan of 25 lakh, interest on which is payable at 9% and 15 lakh interest on which is payable at 7%. Is the specific borrowing transferred to the general borrowing pool once the respective qualifying asset is completed? I want the answer from you. See, I have already explained you. I have given you the clue also here. Now you have to give me the answer. Is the specific borrowing transferred to the general borrowing pool once the respective qualifying asset is completed? And if yes, then why? If no, then why? I'm waiting for the answer, everybody. Please give me the answer. For the period 20x3x4, whether specific borrowing of 50 lakh shall be considered as general borrowing or not. And Whatever your answer is, substantiate also. Anybody? Okay, students are applying. Yes, it will be considered by specific borrowing. Fine. So let's move on. Though it is not given in the question, but still I am calculating the capitalization rate for you for your understanding. Here, 50 lakh is one loan. Interest on this at the rate of 8% comes to rupees 4 lakh rupees. Second borrowing is of 25 lakh rupees. Since everything is for a year, there is no, we have to calculate it by 9 by 12 or 5 by 12 or something. The period is not weighted, average is for one full year at a rate of 9%. So here the rate of 25 lakh, the rate is 9%. So 25 lakh into 9%, you get 2,25,000. Another borrowing is of 15 lakh rupees, and the borrowing is 7%. One lakh 5,000. Okay. Okay, one more student has joined us, Priya. Good, Priya. Yes, you were there earlier also. Sorry, I missed you. Second half you were there. Good. Now you're also participating in this replies. Good. Please be interactive with us. So here we got total borrowings. Here we got the total interest on individual borrowings and their interest amount. Individual borrowing, their interest amount. But all these are general borrowings. So we'll sum up these borrowings: 50 lakh plus 25 lakh. And then 15 lakh. So total borrowing is 90 lakh. Amount 4 lakh plus 2,25,000 plus 1,05,000. This is the total borrowing cost. So to calculate the capitalization rate, what will we do? Borrowing cost on these general borrowing, on general borrowing upon general borrowing into 100. This is the capitalization rate formula. So 90 lakh, sorry, I'm sorry. 7,30,000 divided by 90 lakh into 100. You will find the capitalization rate. Your interest capitalization rate appears to? Yes, 8 point. Very good sign, Vidula. I am a bit slow in calculation, but you all are very quick. That's good. Thank you. It is 8.11%. Sometimes going pathetic. 8.11%. Fine? Yes. Hope this is clear, though it was not asked in the question, but for your understanding, I explain what is capitalization rate, how it is used, why it is used. Fine? Let's move on with next illustration. This illustration I am giving you all to check it out. Beta Limited had the following loans in place. I'll discuss this illustration, but I'm not going to do any computation on my own. You have to tell me the figures and I'll put it on the board. Beta Limited had the following loans in place at the end of 31st March 20X2. Loans were 18% bank loan, 16% term loan, and 14% debentures. So 18, 16, and 14 is the interest rate. Amount is given on 1st April, whatever loan they have incurred, that was on 31st March 20X2. It means it is still outstanding. The loan continued for 1 year. 16% term loan, also whatever the amount was on 1st April, that is there on 31st March, it's still outstanding. 14% debentures was there on 31st March 20X2. It was not there at the beginning of the year. For 14% debentures, information is given. 14% debentures were issued to fund the construction of office building on 1st July. But the development activities has yet to be started. It means the fund was loan was taken on 1st July. It was at the mid of the year. Sorry, not mid of the year, because it is a financial year from April X1 to 31st March X2. So it will fall somewhere here. It means for 9 months. Okay, 1st July to 31st March, July, August, September, October, November, December, January, February, March. It comes to 9 months. So 9 months, for 9 months, you have to calculate the interest, and that is to be used for your weighted average. Okay. On 1st April 20X1, Beta Limited began the construction of a plant being qualifying asset using the existing borrowings. Expenditure drawn down for the construction was 5 lakh on 1st April and 25 lakh on 1st January 20X2. Calculate the borrowing cost that can be capitalized for the plant. So first of all, you have to say what is the capitalization rate. I want capitalization rate, and you will be giving me the answer. Please give me the answer. What would be the capitalization rate? For plant and for office building. First of all, you have to identify what are the qualifying assets in this question. There are 2 qualifying assets in the question. How many qualifying assets are there in the question? So students, how many qualifying assets are there in this question? Okay, 16.5 is the correct capitalization rate. Sorry. 2 qualifying. Yes, Vidula, you are right. There are 2 qualifying assets. One is construction of office building, and second is construction of a plant. So there are 2 qualifying assets. For construction of plant debentures, it is specifically mentioned that this is used for office building. It means other 2 funds are used for your plant. For plant, I got one capitalization rate. Sidearm is saying 16.5%. 16.5% is the capitalization rate for borrowing. Okay, capitalization rate we got 16.5%. Hope it is okay. Everybody is able to calculate this, or somebody wants to know how to calculate it. For the sake of understanding, yes, 16.5%. Let me show you to calculate, but yes, Saira, you are correct. 16.5% will be the capitalization rate, but capitalization rate is to be used for which qualifying asset? This is also important. Since there are 2 general borrowings for construction, which was used for construction of plant, so we have to calculate the capitalization rate for capitalizing the borrowing cost for this plant, construction of plant. However, for office building, you have only 1 general borrowing to be used. So in that case, there is no need to calculate the capitalization rate. Whatever the rate of interest is there for that borrowing, that will be considered as your capitalization rate. So capitalization rate is calculated when there is more than 1 borrowing. Okay. So with this 1,000, 18% of 1,000. This is the interest amount for a bank loan, plus 3,000 pay 16%. This will be the interest amount for term loan. These are the 2 amounts divided by 2 loans. 1,000 plus 3,000. Okay, you will get the capitalization rate. 180 plus, this is in thousands, huh? Rupees, these rupees are in thousands. 3,000 plus 16% is 480 divided by 4,000. You get 16.5%. Right? This is the capitalization rate used for borrowing the capitalizing the borrowing cost of plant. With office building, you have to simply do 2,000 into 14% into 9 by 12. That will be the amount which is to be capitalized for debentures. 2,000 into 14% into 9 by 12. Why 9? Because from July to 31st March. That will be the amount. When nothing is mentioned, we can consider it because it was given at the place at the end of 31st March. So we assume that office building has yet to be constructed. It is on 31st March. The construction is still going on. So you have to calculate till 31st March. So for 9 months we have calculated and we find the amount of borrowing cost for the office building. Hope it is clear. This is the interest amount and 16.5 will be used for which figure? This. What will be the, now again I need a question. Okay, Vidula has given me the answer. Capitalization rate is 16.5. Very good, Srinidhi. Now I want one more answer from you all. Please give me what is the borrowing cost to be capitalized for plant. You have calculated the capitalization rate. Now give me the borrowing cost amount which is to be capitalized with small equation so that I can understand. Otherwise, I have to calculate it here. Huh? Just for space, I am reducing small because I believe this has been understood. I need amount what is to be capitalized on this 5 lakh and 25 lakh. What is calculated and how it is? 16.5 you have to utilize, use this rate. I understand. Then what next? Anything to be multiplied here? $185,625. I have got one answer. 185,625. Yes, 1,85,625. You will find the amount here. This amount plus of these things will be here. This will be 1,85,625. I hope it is clear to everybody. Everybody, it is clear. Amount is there. If you want, I can write individual amount also, but it is understood. 5 lakh, since it is used from 1st April, for whole year you have to calculate. And for 25 lakh, which you started using from 1st January. So for 3 months only, you have to calculate the borrowing cost on it, and that 3 months will be considered. Fine. So it will be 3 by 12. Here it will be full 1 year. Okay. Let's move on to next question. Good, Sundhi. We'll move on to next question. This is the question from Test Your Knowledge question. An entity constructs a new head office building commencing on 1st September 20x1, which continues till 31st December 20x1. Directly attributable expenditure at the beginning of the month on this asset is rupees 1 lakh in September 20x1 and 22,50,000 in each of the months of October to December. The entity has not taken any specific borrowings to finance the construction of the asset, but has incurred finance cost on its general borrowing during the construction period. During the year, the entity had 10% debentures with a face value of 20 lakh and had an overdraft of 5 lakh, which increased to 7,50,000 in December. Interest was paid on the overdraft at 15% on 1st October, and then the rate was increased to 16%. The specific reason for taking this question. Students, please, there's lots of confusion among this students in the public. I have gone through many videos. I realize that they are having confusion. We have given a different treatment to this question, is the manner of presentation or manner of competition, but the end result is going to be same only. But still there is lots of confusion, and this question is very important. It's tricky because it involves different amount, it involves different interest rate, it also involves different period. That is the reason this question is good question, fairly good question, and it has that trickiness with that. What chances of errors are there? So you have to be very careful with that. First is that the entity has taken any specific borrowing, has not taken any specific borrowing. So everything is out of general borrowing to finance the construction of the asset, but has incurred finance cost on its general borrowings. During the year, the entity has issued 10% debentures with a face value of 20 lakh. So one of the borrowing is 20 lakh with 10%. Okay. Borrowing. Here you are not aware when was this debenture issued. During the year it is mentioned, but exactly the year is not mentioned. That's why what we considered is that what is the construction period? Construction period is 1st September to 31st December. That is September, October, November, and December for 4 months. So we calculated it for 4. Fine. Just a minute. By 12. I'm going to solve this question from 2 different perspectives. One, to calculate the capitalization rate for year, and to calculate the second is to calculate the capitalization rate for that 4 months. So that is for 4 months. Okay. First, I am doing it for a year. So try to understand 20 lakh into 10% into 4 by 12, assuming that for 4 months you have to calculate the interest amount. Okay. This is mentioned here. Then is another amount, 5 lakh. Had an overdraft of 5 lakh, which increased to 7,50,000 in December. So it means this 5 lakh amount continued for, and the interest rate is 16%. Sorry, interest was paid on the overdraft at 15% till 1st October, and then increased to 16%. Fine. So 5 lakh for September, it was 15%. Okay. So it means for 1 month I have to calculate, because after 1 month my interest rate is going to change. The amount will change later on, but my interest rate is changing next month only. So 15 month, in month of October, my interest rate is changing to 16%. Fine. 5 lakh again, because the loan of overdraft increased to 7,50,000 in December. It means this was for September, this was for October, and for November also this interest rate is going to continue. Fine. For how many months this 16% interest continued for this 5 lakh amount? This continued for 2 months, October and November. In December, the amount changed to, this amount changed to, in October, this amount changed, and in December, this amount, October and November, we were calculating this. Now, in December, this amount changed to 7,50,000. Interest rate is same, 16%, and period will be only 1 by 12. Why? Because we have to calculate from 1st September to 31st December. So, this is for complete. First, your debenture amount is for 4 months. However, your overdraft amount is to be calculated in a phased manner. So first we are calculating the interest on all these general borrowings. Okay, so you will get the amount here. Since calculation takes time, I have already made the calculations and I've come out with the figures. It will take time, so I'm just showing you the figures. Okay. So my amount coming is here is 96,250. Please check this amount. I have already calculated it here because it will take time and we are running out of time. We are 9:34. I'm too slow, it means. Let me 6250, 13,333, and then 10,000. Okay, so my interest amount is coming 96,250. In a similar manner, I will also calculate my weight. This is what? Borrowing cost. This is what? Borrowing cost. Let me check. I have created, yes, I have created a blank screen also here. So this is the borrowing cost. I'm moving to the next. Borrowing cost you came at 96,250. Now let's calculate the weighted average borrowing. What is weighted average borrowing here? Weighted average borrowing will be 20 lakh first debentures, which was for 4 months. 5 lakh borrowing, which was for 3 months. And then it increased to 7,50,000. It was for 1 month. Fine. We are doing weighted average for the borrowing cost. We have done the weighted average for borrowing cost. We are doing weighted average for borrowings as well. So it comes to amount 6,66,667, 1,25,000, and 62,500. Total comes to 8,54,167. When we have to calculate the capitalization rate will be 96,250, which we have arrived here. This one, this figure divided by 854,167, which is this figure, into 100. You get the capitalization rate. This is 11.27%. This 11.27% is annual rate. This is annual rate, per annum rate. That is to be considered. If now we are considering, this is not the solution which is given in the study material. However, answer is going to be same only. Now let me show you how. If we are considering a period of 4 months, it means a year has 3 blocks. Say January to April is 1 block. May, June, July, August to August. May to August, second block, and then September to December, it is third block. Okay, clear? This is clear or not? So it means a year has 3 blocks of 4 months. Fine. If I divide my 11.27% interest per annum into 3 blocks, what do we get? What do we get? 11.27% divided by 3 blocks. Each block has a percent of 3.756 or 7.7 if you do the rounding off. Fine. This is the answer given in the study material. So what is this answer? 3.756 is the capitalization rate for 4 months. If you are calculating the capitalization rate for the whole year, it arrives to 11.27%. So any student who have arrived at 3.756%, mentioning it as a capitalization rate for 4 months, or any student who have arrived at 11.27% per annum as a capitalization rate, both are correct. This is simply a way of understanding your conceptual clarity which is required. The reason specific for taking up this illustration was that there are many misconceptions. We have given 2 different treatments. It is only presentation way, different manner of calculation, arriving at the same solution. And I should give you different way of treatment because that will make your conceptual clarity, that will do your conceptual clarity. So you have to not go by बड़ी मतलब मैकेनिकल नहीं होना है आपको कि आपको स्टेप्स याद कर लेंगे हैं, आपको उसकी कॉन्सेप्ट पीछे का अंडरस्टैंडिंग भी होनी चाहिए. You have to understand the concepts properly. What is the underlying provision, principle, concept applied, and if it is आपको थोड़ा सा twist and turn दिया तो आपको घबराना नहीं है, आपको समझना है कि क्या इसमें इशू है, क्या कैसे आया, कहीं घूम फिर के बात वही तो है नहीं है ना. So this is the same thing. If you want to calculate individually also, you can do that also. How to do it? Same. What is given in the study material is they have calculated this 96,250. They have done the weighted average. They have done the weighted average in the form of simply 4 1. They have calculated product method. Instead of weighted average method, we have in the study material, it is done product method. And when you have done the product method, 20 lakh divided by, multiplied by 4, 5 lakh multiplied by 3, 7 lakh 50,000 multiplied by 1 month. Whatever comes, they have divided that with the 96,250 and they got interest capitalization rate for 4 months. Okay. The weighted average has been done for both to calculate the annual interest rate. Otherwise, your annual interest rate was, and now what we have done is in the product method, we have calculated the weighted average is done for both because borrowing was taken at different period of time. So, Jay, you were asking why we have done weighted average for both. Weighted average we have done for both because borrowing was also taken at different point of time. It is not that interest has been incurred for different period of time. Borrowing was also taken at different point of time. That's why borrowing we have done the weighted average for both the things. Okay. Shall we move on to next question? Yes, 3.76 Vidula, that is also correct. Period of capitalization. Next page. This is very important. Very mainly use this concept when you are doing your consultancy. After qualifying, you will be stuck. You need to find the answer. You have to go this provision. This is very important. Till now, we have studied what is scoped out from the standard, what is the recognition, what is the amount, how to calculate borrowing cost, what is the recognition, when to do, what amount to be recognized. Now, when to be recognized. When to be recognized is first thing is that period of capitalization will be commencement date. What is commencement date? Commencement date, an entity is required to begin the capitalization of borrowing cost as part of the cost of qualifying asset on the commencement. Commencement date starts from the date when the entity first meets all of the following conditions. So all these 3 conditions has to be met cumulatively. It is not that when you meet any of the criteria met and you start capitalizing the borrowing cost. No, you have to see all the 3 conditions are meeting at what point of time. And from that point of time, your capitalization will start. For example, a company borrowed fund on 1st April. 1st April, they borrowed fund. Borrowing was done. Okay, so it incurs borrowing. When you started borrowing, your borrowing fund ka meter bhi shuru ho gaya na, so your meter also started. So borrowing cost will incur starting from 1st April 2000X1. However, you paid in advance for machinery. You have to construct a plant, a project, and for that you paid some advance money to a vendor. So you paid on 1st May 0X1, you incurred expenditure incurred, but this was the advance money. You have not started the construction activity. You have only paid the advance money for acquisition of one of the machinery, which will be used for your project. Fine. Now that machinery comes to you after 3 months, and after that only you started your construction period. So that or you paid your advance money and the supplier gave you the machinery after 2 months. So your construction started say by 1st June. After 1 month they have given you the supply and your activity started. Construction activity started on 1st June X1. So in that case, when your construction activity started on 1st June, at that time borrowing का मीटर भी तो चल ही रहा था, वो खर्चा जो आपने किया था तो वो तो आप उसी के बेसिस पे आपको मशीनरी मिल रही है. तो these are cumulatively used on this date also. So your commencement date will be 1601 when all the 3 activities have started. At that particular date, that date will be considered as your capitalization date. And commencement date, sorry, this will be considered and your borrowing cost will be from 1st June 2000X1 to 31st March X2. This will be your borrowing date. Fine. Okay, got my point? Commencement date will be the date when all the three conditions are met, and all the three conditions are met on 1st June 2000x1. So your capitalization will start from 1st June 2000x1 till 31st March for that particular reporting year. Period of capitalization. Is it clear to everybody? Can we move ahead? Is it clear to everybody? Because this is important concept. Most of the time it happens that construction starts later point of time and we are not able to realize when to start the capitalization. We start doing it from 1st April 20x1. But in actual, it is to be capitalized from first when the activity is also started, your expenditure has also been incurred and borrowing cost has also been incurred. Since I am running out of time, so I'll move on to the next slide. In case you have any issues, you just post me, and meanwhile I'll check and I'll reply you. I'll reply you in real time only. As soon as I get your query, I'll reply you. I'm moving to the next slide. Expenditure incurred on a qualifying asset. So right now we have considered that, okay, these are the amount which is to be done. Amount of expenditure on qualifying asset may be in different form. Like for general borrowing, we have to consider what are the expenditures. In the previous also, we checked. This is the second thing here. It incurs expenditure for the asset. So what is the expenditure which will be considered as an expenditure for a qualifying asset? The expenditure will be payment of cash, transfer of other assets, assumption of interest-bearing liability. Interest-bearing liability assumption is basically Ind AS 116, you can say. Okay, there you can say, okay, you have incurred that. Payment of cash, transfer of other assets. In case you are paying any cash, you are giving any asset in exchange of that. Say, take my this, and in exchange of that, you give me that. So the cost of that particular asset is whatever I have paid to you. Fine. And expenditures are reduced by, I got some query. Okay, what happens to borrow cost before commencement date? Borrowing cost before commencement date will be expensed out, because for that period it will not be considered as capitalized, so it will be expensed out. Right? Good question, Jay. You should be active, very sharp, and try to understand from every corner. Good question. What will happen from before commencement date if you have the first, like here, he's talking about from 1st April to 1st June. Whatever borrowing cost we incurred, because meter to start ho gaya tha aapka. So what is for 2 months, whatever borrowing cost we are incurring, what is to be done with that? What will be the treatment for that? But that will be expense in your P&L account. That will not be capitalized. Expenditures are reduced by any progress payments received and grants received in connection with the asset. So whatever you are doing, in case you are paying 10 lakh rupees and against that 10 lakh, you've got government grant of rupees, say 4 lakh rupees. So your actual expenditure will be considered as rupees 6 lakh only. So 6 lakhs will be considered your expenditure on which you have to calculate your borrowing cost. Okay. Any progress payments received means any further amounts which you are going to pay that later on progress payments. So that will also be reduced. Any further amount that will reduce your expenditure you have received. I have incurred expenditure. I am building the construction for somebody else, and I have to pay 5 lakh rupees. 5 lakh means I get 3 lakh rupees progress payment I have received. This is received. I have received 3 lakh rupees. So my actual expenditure is 2 lakh rupees. So I have to incur my borrowing cost on 2 lakh rupees. 3 लाख तो मुझे अपने से मिल गए ना, 3 लाख उनसे मिल गए, तो उसमें मैंने अपना फंड यूटिलाइज नहीं किया. तो जब मैंने अपना फंड यूटिलाइज नहीं किया तो मैं इसकी borrowing cost पे नहीं कुछ करूंगी. तो मेरा फंड यूटिलाइज जो मैंने borrowings अपनी यूज करी है for construction of that asset will be ineffective only 2 lakh rupees. तो मैं 2 lakh पे ही borrowing cost कैपिटलाइज करूंगी. Okay. Activities necessary to prepare asset for its intended use. This is also very important. This may be tested. Sometimes it is happening that कि कुछ हमको ये समझ नहीं आ रहा by what time we say कि activity हमारी start हो गई है. आपकी physical construction शुरू नहीं हुआ लेकिन आपकी activity शुरू हुई. Any activity which started, even if your physical construction you are not able to see, paperwork has been started. Paperwork is of what nature? That is important. If paperwork is of technical and administrative work, which is necessary for the commencement of physical construction, then such activity will also be considered as activity necessary to prepare asset for its intended use or sale. Okay. The example is permit, license, like what we have gone through the previous illustration of telecom license for using that cable network, or not. So in that case, what was there? The permit which we obtained, that is also commencement of the activity. Maybe not physically, you are not seeing this, but it is the paperwork has started. You have received it over the permission has been required. So everything that is also an activity for bringing the asset for its intended use or sale. So that will be considered as inclusive of the activity, and it will be considered as, yes, your work has been started. However, certain activities will not be considered as activity to be started, like holding of asset when no production or development that changes the asset's condition is taking place. You did something, but that is not changing the, like for example, you have to hire people for construction of the asset. Those people, when you talk to them, they start, or when you prepared a site for construction purpose, you were preparing a site, or you just purchased the land, and what happened? People started building their slums in that nearby area, and starting work has been done. So your project has not been started. Construction directly attributable cost has not been started. People started staying there, and they were later hired. So they said, okay, slum was started building from that particular point, so we can start capitalization from that point. No. For example, I'm giving it through with the help of with the help of some dates. I have to start a construction of project from, I'm planning to start construction from 1st July. However, when this news came into the market, people started living nearby. Those who are in need of the job, laborers area, they started living nearby, in the nearby area. They developed some slum there, and they started living. Ultimately, out of those, only some people were hired for construction of your plant. Now, the company cannot say, though my construction started, physical construction started from 1st July, however, the slum people started living before that, and those people have been hired for the construction of this project work, and they prepared their slum because of this right from 1st April. So I have to start my capitalization from 1st April. So that will not be allowed, because your asset, qualifying asset की condition में कोई change नहीं था. You were planning it from 1st July only. People started living there. That is not going to change the. We cannot say that there is any production or development has been started. There was no change in the asset condition of the asset. The holding of an asset when no production. So this will not be considered, because you started, you gave that announcement, you marked the land. So it does not mean that your land asset has been holded and value has not been changed. Since value is not changed, so it won't be considered as the activity being started. Okay. For example, borrowing costs incurred while land is under development are capitalized during the period in which activities related to the development are being undertaken. However, borrowing costs incurred while land acquired for building purposes held without any associated development activity do not qualify for capitalization. You holded the land, but you are planning to start the construction or from July. By the time other activities done, which was not related to the development, increasing the value of the asset, will not be considered as the activity being started. Fine. Let's start with some illustrations. This will involve you. X Limited is commencing a new construction project, which is to be financed by borrowing. The key dates are as follows. 15th May, loan interest relating to the project starts to be incurred. 2nd June, technical site planning commences. 19th June, expenditure on the project started to be incurred. 18th July, construction work commences. Identify the commencement date. I want answer from you all. What will be the commencement date in this question? We have previously given you, I have given you an example. I have explained you the concept. Now I want the answer from you. And please be quick, because we have to still cover. Let me check how much I have to cover, but still we have to cover a lot. Okay. Okay, I am here and here. Between them. I'm still having a few slides to go now. This is the slide. I'm on slide number 36 and I'm having still till 47. I'm having 10, 11 slides to explain. Answer, I'm still waiting for the answer. What will be the commencement date for this particular illustration? Yes, 18 July, 19 June. Srinidhi, why 18 July? Expenditure on the project started to be incurred on 19 June. Technical site planning commences on 2nd June. 15th May was a loan interest relating to the project starts to be incurred. Fine. Why it will be 18 July? Expenditure on the project started to be incurred. Construction work commenced. Technical site planning commences. In the earlier slide, if you go through the earlier slide, let me go to the earlier slide. Fine. Just a minute. Here see, technical work prior to the commencement of physical will be considered as included activities. Okay, Srinidhi? So, even if we are doing technical site planning commences from 2nd June, it means your activity has been started. Loan, so first clause was yours, just a minute. Your first clause was borrowing cost incurred. This was done on 15th May. Second was activity incurred, activity started. This was done on 2nd June. Then was expenditure incurred. 3 conditions to be met cumulatively. Expenditure incurred was on 19th June. So 3 conditions met on which date? Cumulatively met on 19th June. So it will be 19 June. Srinidhi, you are saying 18 July. Jay, you also saying 18 July. Vidula, you also saying 18 July. No, beta, 18 July construction work commences, but technical site planning will also be considered as an activity. These are the correlated activity. What we have studied earlier, technical and administrative work prior to the commencement of physical construction will also be included as activity necessary to prepare asset for its intended. So this is an inclusive activity. So we will consider even the technical activity will be considered as activity started for construction, activity undertaken for the construction. So in that manner, physical construction we do not have to wait for physical construction to start. Even the technical or administrative paperwork related to that construction work, if it starts beforehand, we will consider that date to be considered as activity being started. Okay. So your answer should be 19th July. So beta, why are you saying now, Vidula, now why are you saying 2nd June? 2nd June, technical site planning started, but expenditure was not incurred. Na? So expenditure was not incurred, so it will not be considered as 2nd June also. We need 3 conditions to be met all at the same time. So for all at the same time, or all in cumulative. So cumulatively, it will be considered as 19th June. Okay, Vidula? Hope now it is clear to you. Now, period of capitalization includes second point, which is suspension of capitalization. One is when the capitalization is to be started. Second is when to be hold on. It is not stopped. It is to be hold on. For example, I started my construction from 1st April 20x1. After 5 months, there was certain reason because of that I have to hold my construction. I stopped my construction. I postponed my construction for few days or for few months. Say for 15 days, I stopped my construction. So for those 15 days when no activity undertook place and it was avoidable situation, then in that case, we have to stop the borrowing cost capitalization also for that particular 15 days. Fine. So that is called suspension of capitalization of borrowing cost. When done, when we do this suspension, when suspension is allowed, when active development of qualifying asset is suspended, you have to stop the borrowing capitalization of borrowing cost for that particular period. And when this suspension is not considered, it is not considered as suspension when an entity carries out substantial technical and administrative work, when a temporary delay is necessary part of the process of getting an asset ready for its intended use or sale. What does this mean? Okay. What does this mean? What happens sometimes while when you are doing something in which some paperwork is required, without that you cannot move ahead. So you are doing some paperwork, but you are not doing your physical construction. But still, the paperwork is going on. Paperwork is required. It is unavoidable. Without doing that, you cannot continue your construction. So that will be considered as construction work is still going on. It will not be considered as that construction work has been put to hold or suspended. So in such a situation, your suspension of borrowing cost will not be done. You have to continue capitalizing the borrowing cost for that particular period also. Similarly, sometimes temporary delay is necessary part of the process of getting an asset ready for its intended use or sale. For example, you are constructing a building. When you are putting cement, when you are preparing a wall, you need to moist them. It needs to be hardened out. So if 2 days or 3 days, it takes time to come to the structure so that you move to the next level. So 2-3 days is the unavoidable time. That is the delay which you cannot stop. Or sometimes what happens when you are doing the construction, you found that underground, you found some obstacles, a big rock came out and you are not able to take it out immediately. So you are trying to remove it, you are trying to bring some big machine, some big bulldozer there which can take it out, that rock, and then you can move ahead. So that is unavoidable. Your construction stopped because that rock has not been removed. And for that removal of that rock, you need some big machinery, you need some big vehicle. So you are calling for that, and that is taking some time to come to that construction site. So that is temporary delay, and it is necessary for the process of getting an asset ready for its intended use. So in such a situation, that will not be considered as suspension of the activity because your activity is still going on. You call for that, that person is taking time, that is not within your purview, that is not in your control. You have to bear that situation. So that will be considered as your construction is still going on. And when it is considered as your construction is still going on, it means you have to continue capitalizing your borrowing cost. Okay. Now, Jay has asked one question. Due to increased pollution, COVID construction works get suspended. Should we suspend borrowing cost? See, due to increased pollution or COVID construction work get suspended. Yes, because it was unavoidable. Because of COVID, your construction work stopped, but it was the active development of it was suspended, but this was not temporary delay is necessary part of the process. That was not COVID, because of COVID, it is not the process of getting that asset ready to use. This was something unavoidable, which was not under your control. It's true, but that was not because that step was not required for process of construction. So it will not be considered. However, fair judgment has been done by people, some relaxation has been given, but it is not a process. See, please go through this line. When a temporary delay is a necessary part of the process, necessary part of the process of getting an asset ready. COVID is not a necessary part of the process of getting an asset ready. So it will not be considered as suspension should not be done. However, active development of qualifying asset is suspended. So you have to hold a suspension. Capitalization rate is, you are not required to capitalize borrowing cost for that particular period. Okay? Due to necessary, same with pollution also, even even for pollution also, you have to consider that pollution is not the necessary part of the process of getting an asset ready for use. Be very careful with each and every word which is there in the standard when you have to identify the things. That will itself give you the answer. Okay. So since you are asking for COVID, construction work gets suspended. So this will fall here in when suspension is to be done. Should we suspend borrowing cost? So yes, we have to suspend the borrowing cost because of COVID, because active development stopped. Okay. Clear, Jay? Hope it is clear to you. Shall we move ahead? Let's go with an example. I'll be taking half an hour more for completing the session. Mostly illustrations are there. One cessation point is there and one extra disclosure is 2 points only. So I'll be taking half an hour. For sure, I'll wind up within that half an hour. Okay. Example. Construction suspended when between October 2000x1 to January 20x2, during which period certain heavy construction equipment under use was shifted to another site. Construction suspended between 1st October to January 2000, during which period certain heavy construction equipment under use was shifted to another site. What should we do? Should we suspend we should consider as suspension and we should stop capitalizing a borrowing cost or not? So in this case, capitalization of borrowing cost needs to be suspended since active development is interrupted. Shifting of heavy construction equipment from one site to another site, it means it was not necessary for that process of constructing that particular plan. It was that if from one project you are shifting that equipment to another project, so it means construction of another project will start. So this temporary delay is putting on hold the construction activity. So that's why your suspension will also be, your activity is suspended, so your borrowing cost capitalization will also be suspended. Second point, when qualifying asset construction is about to complete, there was a temporary delay of 20 days on account of some technical reasons. Technical reasons means it is for that particular process of construction only. Without that technicality is involved for construction purpose only, no? So that is necessary for your that construction activity. So yes, then in that case you cannot stop. You cannot consider as suspension of the activity. You will consider that activity still going on, continuing. Somewhere on paper work is going on. Temporary delays or technical reasons are they are being resolved. So you will not put on hold the borrowing cost capitalization also. Okay. Now we come to when we have to end this capitalization. Till now we have studied when to start the capitalization, how to start, what is the amount to be capitalized, when to stop for the time being, but not to put an end. Now we are talking when to put an end to this capitalization. Simply, our first point was when it takes substantial period of time to complete all the activities for construction of that, for bringing that asset to its intended use or sale. Okay, so substantially all the activities when completed for what? Qualifying asset for its intended use or sale are complete. When all the activities, substantially all the activities are completed, you will stop capitalizing the borrowing cost. Okay. Asset is normally ready for its intended use or sale when the physical construction of the asset is complete, even though routine administrative work might continue. That's why we are not saying 100% complete. We are saying substantially all the activities are completed. If substantially all the activities are completed, then it means that you can stop capitalization. For example, you have booked the flat. That flat is ready for possession. However, after possession also the builder is doing certain cosmetic changes or certain like putting fans, fixing tube lights and all. So electric wiring, everything has been done. All activities, substantial activities has been done. One or two extra activities, even which will continue even after possession, that will be considered as substantial. All activities have been done, and you have to stop capitalizing the borrowing cost. Even if that the fixing of tube light is there, fixing of borrowing is there, geyser or whatever extra facilities he promised you to give, that is still to be done. fixing of AC, fixing of geysers, but substantial activities has been done. Your house has been, your whatever your flat is ready for possession for moving, so you can stop capitalizing the borrowing cost. Okay. When construction is completed in parts, what happens? Suppose, for example, we are constructing a mall. In mall, there are many floors. In every floor, you are doing some activities, and there are few shops. At the top is the food court. Food court is still not ready, but other three floors, therefore, that mall is having 4 floors. The first 3 floors are having shops, and the 4th floor is the food court. So food court is not ready, but all the other 3 floors are ready. So in that case, sorry, something went wrong. I'm just sharing my screen again. Okay, I hope it's visible now. So even when your construction is completed in parts, for whatever part which is completed, in proportion to that, borrowing cost should be completed, should be ceased, just stopped. And for the part which is still undergoing construction, you can continue capitalizing the borrowing cost. Next, move on to some questions. H Limited, a real estate company, gives immovable property on rent. It has completed on 31st May 20X1 a commercial complex consisting of various offices that could be rented out. It expects that commercial complex will be completely rented out by 30th June. See, completion was on 31st May, though they are expecting that it completely rented out on 30th June. However, due to adverse market conditions, only 10% of the commercial complex could be rented out by its reporting date of 31st March X2. H Limited want to capitalize the eligible borrowing cost incurred up to 31st March 20X2. You tell me whether you should capitalize it or not till 31st March. I want answer from you all. Please come up with your answer. Till what time capitalization should be done? Till what time borrowing cost should be capitalized? Whether it should be 31st May 20X1, 30th June 20X1, or 31st March 20X2. By what time capitalization should be stopped? By on what date capitalization should be stopped? (31st May). Good, Priya. It should be 31st May only because your work completed on 31st May. What is the, irrespective of the intention or the planning or the estimates that by what time it will be rented out or it was not rented out, still unoccupied, that is immaterial for this standard for the capitalization of borrowing cost. What is important is when the activity was completed, and the activity was completed by 31st May 2000X1. So your borrowing cost should be capitalized till 31st May 2000X1 only. Good. Okay. Move on to next slide. This is test your knowledge question. Similar in this line is Marine Transport Limited ordered 3 ships for its fleet on 1st April 20X2. It pays down payment of 25. It pays a down payment of 25% of the contract value of each of the ships out of long-term borrowing from a scheduled bank. The delivery has to commence from financial year 20X7. On 1st March 20X2, the shipbuilder informs that it has commenced production of 1 ship. There is no progress on other 2 ships. Marine Transport Limited prepares its financial statements on financial year basis. Is it permissible for Marine Transport Limited to capitalize any borrowing cost for the financial year ended 31st March 20X1 or 31st March 20X2? They ordered 3 ships on 1st April. They made the payment. Delivery has to commence from year 20X7. The builder informed on 1st March that it has commenced production on 1 ship only. Commenced means the commercial activity started on which date? 1st March. There is no progress on other two ships. Marine Transport Limited prepares its financial statements. First condition was that you have incurred the expenditure. Expenditure was incurred when your payment was done. 25% of the contract value, you have incurred the expenditure. You have incurred the borrowing cost. Borrowing cost also, you have taken a loan. This is not mentioned. We are assuming that borrowing cost is there. Now, when was the activity started? Activity started, third condition which has to be simultaneously meet out, cumulatively meet out, which was activity started on 1st March. It means 1st April to 30, sorry, from 1st April 0 x0, 1st April to x0 to 31st March x1. This third condition is not meeting out. Activity has not been started. Since activity is not started, so no capitalization will be done. No capitalization. Okay. Now, from 1st x1 till 28th February x1, no capitalization will be done. Again, for the same reason, activity started on 1st March. So 1st March x1 to 31st March x1. Only for 1 month capitalization of borrowing cost. Okay? We have to meet 3 conditions. 3 conditions में से 2 conditions तो आप ही meet out हो गई थी starting में, but the third condition was not meeting out. It met on 1st March 2002. So one financial year went off. In the out of second financial year, 11th month went off. Only for 1 month we have to capitalize the borrowing cost. The reason behind, because all the 3 conditions were not meeting out cumulatively. Okay? Yes. 1st March will be the date from where your capitalization will start, and that too only for one ship, because for the other 2 other ships there was no progress. So this is also to be kept in mind. Whatever payment you are doing, if you are doing say 75 lakh payment you have done for 3 ships, 25 for each ship, so only on 25 lakh you have to start your borrowing cost capitalization. Okay, for 2 other ships, conditions are still not meeting. Activity has still not started. So third condition is still not meeting. So borrowing of capitalization, capitalization of borrowing cost will not start for 2 ships. It will start only for 1 ship, for which the third condition has met on 1st March 2002. So that is also to be taken care of. First is when to start and on what amount to be started. The amount will be only for 1 ship. Okay, in proportion to 1 ship only. Dividends payable on shares classified as financial liability. See, I told you earlier also, preference shares sometimes are classified as financial liability. When they are classified as financial liability, so dividend paid on those preference shares will be considered as interest, will be considered as equal to interest. And when it is considered as interest, so we can capitalize, and that proceeds of those preference shares are used for construction of any qualifying asset. So definitely, that interest cost will be used, considered as borrowing cost to be capitalized, right? If all the 3 conditions of the period of commencement is met out. 2 ship will expense borrow cost. Yes, Jay, it will be, because by the time construction, all the 3 conditions are not meeting out. So whatever borrowing cost we are incurring for that period, which will be considered as expense and will be charged in your profit and loss account. Capitalizing borrowing cost in group financial statements. What happens? In a group, there is a holding company, there are subsidiary companies. It may happen holding company has taken a loan for construction of an asset which is being done by subsidiary company. So in that case, in individual financial statements, when subsidiary is preparing a financial statement, they are having an asset for which construction is taking place, but they are not having any borrowing. That borrowing was taken by a holding company. So in individual financial statement, subsidiary company's financial statement, there is an asset, qualifying asset, but there is no borrowing. So borrowing cost will not be capitalized. Similarly, in case of holding company's financial statement, individual financial statements, There is borrowing, but there is no qualifying asset. So no borrowing cost will be capitalized. However, when you are preparing a consolidated financial statement, there is a borrowing, there is a qualifying asset. So borrowing cost will be capitalized. So the treatment will be different in individual financial statement. Treatment will be different in your consolidated financial statement. You have to take care of this, sir. You cannot say कि line by line addition नहीं करना है कि वहां पे 50 लाख उस asset की value थी हमने यहाँ पे भी ले ली 50 lakh is there in the subsidiaries financial statement. I carry on this 50 lakh in my group financial statement. No, that property, plant and equipment or whatever qualifying asset is that value will also undergo a change because of the nature of borrowing and the scenario. Okay. So whatever I told you right now, the entity carrying out, when the borrowings are taken by one company and qualifying asset is developed by another company within a group, it may be appropriate to capitalize interest in the group financial statements on borrowings that appear in the financial statements of different group entity for that carrying amount of the development. I told you, because in group financial statement, borrowings will also be clubbed, qualifying asset will be clubbed. So there is a borrowing also, there is a qualifying asset also. So borrowing cost on that will be capitalized in the group financial statement. Capitalization in such circumstances would not be appropriate if the amount capitalized fairly reflected the interest cost of the group on borrowing from third parties. That could have been avoided if the expenditure on the qualifying assets were not made. If capitalization in such circumstances would only be appropriate if the amount capitalized fairly reflects the interest cost of group on borrowing from third parties. If you are borrowing from third party, otherwise, sorry, मैं अपने point में थोड़ा सा और clear करूँगी. In the group financial statement, there is a borrowing, but borrowing is taken from the third party. In material, that holding company has taken the borrowing, but that borrowing was taken from third party. It is not like that. Suppose A is for example, I am just giving you 2 examples. H is a holding company. Fine. H is an holding company. It has 2 subsidiaries, S1 and S2. If H has taken the borrowing from, say, XYZ, then in the group financial statement, this borrowing is a borrowing from the third party. Since it is a borrowing from the third party, there is a borrowing also, and the asset was, qualifying asset was with S1. Okay, this entity is having qualifying assets. So in the group financial statement, you are having borrowing from XYZ and a qualifying asset, both clubbed together. So yes, there is a borrowing also, there is a qualifying asset also. So borrowing cost will be capitalized. However, instead of this loan being taken from XYZ, if this loan was taken from S2, if this loan was taken from S2, subsidiary 2, in the group financial statement, the borrowing was not taken from the third party. Borrowing was taken from the member of the group. And since it was taken from the member of the group, the borrowing cost in that will not be capitalized because it is not from the third party. Mutual transaction में cut down हो जाएगा ये. तो यहाँ पे borrowing cost नहीं capitalize होगा. Okay? Capitalization would be appropriate when borrowing is from third parties. That could have been avoided. Okay? Entity carrying out the development should not capitalize any interest in its own financial statement as it has no borrowings. ये भी मैंने बता दिया. आपके पास borrowing नहीं है पर qualifying asset है. Still you won't go for a capitalization because there is qualifying asset but there is no borrowing. However, the entity has intra-group borrowings. Similarly, S1 or S2 here. Then interest on such borrowings may be capitalized in its own financial statement. Okay, in that case, you can take. You have taken, S1 has taken a loan from S2. Even though it is an intra-group financial, you can capitalize it. In your own financial statements, you can capitalize it. Okay? Differences I am skipping out. This is theoretical part. You can go through the content which is there in your study material. Since we are running out of time, I would like to do this test your knowledge question, which I told you earlier also. This is the important question. I would like to tell you study material illustration, test your knowledge question. Let me give you the question number. Please do it on your own. In case you have any issues, come back to me. I'll be giving on my personal mail ID at par-final@icai.in. On this mail ID, you can ask me this question. In case you are finding any problem in solving this question, you ask me, I'll be replying you. You can even call me on this number for this question. 0120 is the STD code, 3045916. This is my direct landline number. You can call me on weekdays from 10 to 5:30 anytime. I'll be replying you over the phone for this particular question if you are facing any problem. Otherwise, I prefer query over the technical queries over the mail for this question since I am taking the class. In case you have any problem, you please ask me over the phone as well. Solution is given in your test or knowledge questions. Still, I would like you to solve it independently based on the concepts which I have explained you. This question is a combination of specific borrowing and general borrowing. This question is a combination of specific borrowing where borrowing was of more amount, but expenditure was done in phased manner. I have explained you that also. Though the expenditure was done in 4 phases, 5 lakh, 7 lakh, 8 lakh, if you remember, huh? Whatever that we have to do the borrowing cost on specific borrowing on total amount borrowed, irrespective of expenditure was done in a phased manner. So this question has two combinations. One, specific borrowing, general borrowing. Specific borrowing में भी पूरा फंड एक साथ यूज नहीं हो रहा, फेज मैनर में यूज हो रहा है, तो आप कैसे कैपिटलाइजेशन करेंगे? ये क्वेश्चन आपको इन दो चीजों में देखना है, ब्रीफ कर दिया है, आप इन दोनों कंसेप्ट को लगा के करिएगा, आप आराम से करेंगे प्लीज. हाँ ठीक है. Still, since I was planning to take it till 10:30, so I want you to go through some of the MCQs. Give me answers quite fast, huh? Quick, whatever comes to your mind, but be very careful. No? Don't say thank you, Jay. I'm still having certain MCQs to give, and I want your reply. I want to understand how much you have understood or grasped from today's class. Okay, first MCQ. What happened? Sorry. Okay, first MCQ. In case of specific borrowing, the borrowing cost is capitalized for which amount? Sorry, before that, I just want to say one more thing. Since I gave you my email ID in the previous one, I would also like to tell you, you please download mobile app, BOS mobile app. There is a feature of asking your query. Ask a query that is also replied very quickly, so you can even ask your queries there also. So download mobile BOS mobile app. They use your ask a query feature also. Okay. Now first MCQ, in case of specific borrowings, the borrowing cost is capitalized for which amount? To the extent the borrowings are utilized for the construction of the qualifying asset, to the extent of the expenditure incurred on construction of the qualifying asset, on total amount of specific borrowings from commencement date, less income on temporary investment made out of such borrowings, on half of the specific borrowings. Yes, I started getting the answers. Sairam, very good. You are very quick. Yes. Somebody else would also like to give? Sairam, you are correct. But since nobody will be knowing what Sairam has answered, I'm not disclosing the answer. Somebody else would like to try, or shall I move it to second slide? Okay, next one. The answer for the first one, this one was C, on total amount of specific, irrespective of what is the expenditure done. Since it is a specific borrowing, so your borrowing cost will be calculated on total amount from the commencement date, less income on temporary investment made out of those specific borrowings only. Okay. Next question. Which of the following would be considered as borrowing costs to be capitalized? Interest on working capital, interest on borrowing costs used for manufacturing inventories in large quantities on repetitive basis, interest on borrowings utilized to acquire biological assets measured at fair value, dividend paid on redeemable preference shares used to fund the development of a qualifying asset. Which borrowing cost will be capitalized here? Which interest? Interest on working capital, interest on borrowing cost for manufacturing activities, which is on large quantities on repetitive basis, interest on borrowings utilized to acquire biological assets, which are measured at fair value, dividend paid on redeemable preference shares, used to fund the development of qualifying assets. Redeemable preference shares are classified as liability. I'm giving you that hint. Priya is saying 2 ka D. Jay is also saying 2D. Sairam, you are saying D. Why you are saying D? Interest on borrowing used for manufacturing activities in large quantities on repetitive basis. See, since I have not explained that whether it is taking substantial period of time or not, so with this limited information, AS23 scope out. If you are manufacturing inventories in large quantities on repetitive basis, then interest on such borrowings, interest on borrowings of those used for those manufacturing inventories will not be capitalized. The best answer will be the dividend paid on redeemable preference shares used to fund the development of a qualifying asset. Okay, D1. In B part, you have to put an assumption. Since in MCQs you are not putting an assumption, so it will be best answer will be D only. MCQs. Which of the following is not a qualifying asset? Financial assets, investment properties, intangible plants, or bearer plants. Which will not be a qualifying asset? Srinidhi, you are saying option A. Why question took option A? Interest on working capital. The interest on working capital is not a qualifying. Working capital is not a qualifying asset. No? It is not taking substantial period of time to complete to its intended use or sale. So why that will be capitalized? It will be considered as general borrowing, and when used for qualifying asset, then it will be capitalized. No? Answer would be D, dividend wala. In second case, it will be D. Third MC, this is third MCQ. Which of the I have not given numbering. Which of the following is not a qualifying asset? Financial asset, investment properties. I think Srinidhi, you answered for this wala, na? For this is the third MCQ. Answer is financial assets. My fault. I should have given the number. Okay, I'm putting the number to it so that everybody could. This is MCQ 1. This is MCQ 2, and this is MCQ 3. We instead of going for slide flow, I'm going it in this manner. Okay. Which of the following is not a 3 ka A? Okay, correct. Jay, so okay. Srinidhi, I'm also assuming you wanted to reply for this question only. Which of the following is not a qualifying asset? Financial assets. Because it is always financial assets means which are ready, we can be financed in a short period of time. Okay. Now MCQ 4. Borrowing costs do not include what? Borrow interest expense calculated using the effective interest rate method as described in Ind AS 109. Interest in respect of lease liability recognized in accordance with 116. Exchange differences arising from foreign currency borrowings, or interest expense on own finance resources, or interest notion or notional interest expenses. It should be notional interest expenses. Notional interest expenses. Okay. What is your answer? Borrowing cost does not include. What does is not include? My question is not. Hurry up, beta. We have to wind up. Borrowing costs do not include what? Which interest expense is not included in as borrowing cost to be capitalized? As per I am talking about Ind AS 23. So here when I am saying borrowing cost, what is to be capitalized? Which interest? Okay. Answer is 4D. Okay, Jay, you are answering 4D. Vidula, you are saying 4C. Why 4C? We have done so many illustrations on exchange differences arising from foreign currency borrowings to the extent that they are regarded as an adjustment to interest cost. We out of exchange loss, we identified what was the saving of interest. If it is within the limit of exchange loss, that has to be capitalized. It will be considered as adjustment to interest cost. We did 3-4 illustrations on that, na? So, Vidula, I would like just go through the section exchange difference or go to the study material. C will be considered as borrowing cost to be included. What is not to be included is your notional expenses on own finance resources. You cannot say कि पैसा नहीं आया है, पैसा तो खर्चा माना जाएगा, नहीं आया मतलब हम उस जो हमारे ओन रिसोर्सेस थे, फंड्स थे, हम उनको इन्वेस्ट कर देते तो इंटरेस्ट आता। अब हमने इसको यूटिलाइज कर लिया क्वालिफाइंग एसेट में, डेवलपमेंट में, तो हमारा पैसा नहीं, इंटरेस्ट नहीं आया, तो इसका मतलब है कि हमारा इंटरेस्ट गया। तो इंटरेस्ट गया तो हमारा एक्सपेंस है, तो नो, इट विल नॉट बी कंसिडर्ड फॉर, इट इज नॉट एक्चुअली इंकर्ड ना। ओके, नेक्स्ट वन, दिस इज MCQ 5. What will be the big question? I'll explain you. What will be the treatment of exchange difference resulting into unrealized gain while capitalizing the borrowing cost on foreign currency borrowings taken for a construction of qualifying asset? Here we are talking about unrealized gain, exchange loss to difference. There is an exchange difference gain, not exchange loss. So we are asking for treatment of exchange gain. What will be the treatment? First option is it would not be adjusted to interest, even if there was an adjustment to interest in the previous year on account of unrealized exchange loss. It would be adjusted to interest to the extent of an adjustment to interest in the previous year on account of unrealized exchange loss on settlement or translation of some borrowings, same borrowings. It will be adjusted to interest irrespective of the fact whether there was interest exchange loss previous year or not. It will be adjusted fully, even if there was an adjustment to interest in the previous year. For example, you are having more amount of exchange gain. You are having more amount of exchange gain, that fully it will be adjusted irrespective of what was the earlier previous year, what was the exchange loss adjusted as interest amount. Do we do it some certain restriction? Exchange gains are reverted to certain restriction, or fully it is reverted? Yes, 5B. Good, Priya. 5B. Even if one is answering, I'm moving ahead because I want you all to do all the questions. Okay. Capitalization rate. Capitalization rate is the weighted average of the borrowing cost applicable to all the general borrowings of the entity that are outstanding during the period. Weighted average of the borrowing cost applicable to all the general and specific borrowings of the entity that are outstanding. Weighted average of the borrowing cost applicable to all the specific borrowings, or capitalization rate is the weighted average of the borrowing cost applicable to those general borrowings of the entity only that are used during the period for construction of that particular qualifying asset. I'm not expecting answer for this because I feel I have missed this to explain you. Irrespective of whatever the borrowings you are using it, whatever the general borrowing you are using for development or construction of a qualifying asset. If entity is having more general borrowings, suppose you are having 6 general borrowings with you, out of that only 2 borrowings you are using, 2 general borrowings you are using for development of qualifying asset. So for capitalization rate, you won't be considering the capitalization rate of only those 2 borrowings. You will be considering the capitalization rate of all the 6 borrowings. This I have missed out explaining to you. That's why instead of asking you a solution, I'm giving you the solution. You have to consider. Sorry. Okay. My pen is not working when it is a slide. It's not a slide show, so my pen is not working. Answer would be A, the weighted average of the borrowing cost applicable to all the general borrowings. Definitely specific borrowing will not come into the picture for capitalization rate. So B and C is out. You have to choose between A and D. Why A? Because you have to consider all the general borrowings, irrespective of that which borrowing fund is used for your development of the qualifying asset. Fine. So your answer would be A. Let's move on to next slide. This is MCQ 7. When will the specific borrowing be considered as general borrowing? This should be easy for you all. When will the specific borrowings be considered as general borrowing? When substantially all the activities necessary to prepare the qualifying asset are completed, or when activities necessary to prepare the qualifying asset have been started. When substantially all the activities necessary to prepare the qualifying asset are near to complete, or when specific borrowings are never considered as general borrowings. 7A. Okay, good, Priya. What happened, everybody? Or please be participative. Good, Priya. It will be 7A. When it is completed, activities has to be completed, not started. Okay, MCQ 8. In determining the borrowing cost to be capitalized, the amount of expenditure on a qualifying asset include only those expenditures that have resulted in payment of cash, transfer of other assets, assumption of interest-bearing liabilities, or all of the above. In determining the borrowing cost to be capitalized, the amount of expenditure on qualifying asset includes only those expenditures. What are the expenditures which we have seen in period of commencement? Expenditure to be incurred, borrowing cost to be incurred, and activities to be started. Expenditure to be incurred में हमने तीन चीजें डिस्कस करी थी. Payment of cash, transfer of other assets, assumption of interest bearing liabilities. What? 8D. Very good. Jay, good. It will be 8D. All the above items will be considered as expenditure done for that particular qualifying asset. Okay, MCQ 9. In determining the borrowing cost to be capitalized, the amount of expenditure on qualifying assets are not reduced by. Here I am talking about not reduced by. Progress payment received, grant received in connection with the asset, income on temporary investment of specific borrowing. Which amount is not used to reduce the expenditure amount? 9, MCQ 9, please hurry up. This is the last MCQ. Anybody? Priya, Jay, Shrindhi? Sorry, I am still waiting for MCQ 9 answer. I am not receiving it. What happened? Some network issues there. यहाँ पे इसमें से स्क्रीन नहीं आ रही है. मेरे पास यहाँ पे आंसर भी नहीं आ रहा. देखो यहाँ पे स्क्रीन भी MCQ 8 के बाद नहीं दिखा रहा है. निसर्ग ये नेटवर्क इशू है कुछ. देखिए एक बार MCQ 9 आ नहीं रहा स्क्रीन पे. वो थोड़ी देर आ रहा था. आपको MCQ 9 दिख रहा है? एक बार पहले देखिए क्या है. पहले देखिए. Okay, 9C. Income on temporary investment. Sorry, there was some network issue at my end. Okay, fine. Yes, answer is correct. We are 9C. 9B, who have answered me 9A? No, for this there is all the three are. Sairam, you have given 9A. Vidula, you have given 9B. Priya, you are giving 9C. Progress payment received, I told you, I am using my fund. Let me explain this concept once again. This is the last MCQ. Just give me 2 minutes. Huh? What happens? You have incurred expenditure of 5 lakh rupees. You have given for construction to the contractor, or you have taken on contract with somebody and you are incurring the expenditure. You have till date incurred 5 lakh rupees. Out of 5 lakh rupees, 3 lakh rupees have been received by the customer on whose behalf you are doing that construction. So in actual, you are using your fund to the extent of rupees 2 lakh only. So your expenditure will be considered as 2 lakh rather than 5 lakh because borrowing 5 लाख पे तो 3 लाख पे तो आपको पैसे ही मिल गए ना. तो 3 लाख पैसे मिल गए तो उस पर आपको इंटरेस्ट कॉस्ट भी नहीं देना पड़ेगा. तो आप ये मानोगे कि इन एफेक्ट में आपने सिर्फ 2 लाख रुपए लगा रखे हैं. और 2 लाख रुपए लगाए तो 2 लाख की जो आपका इंटरेस्ट है वो आपको इनकर करना पड़ रहा है, वही आपका कैपिटलाइज होगा। तो प्रोग्रेस पेमेंट जो आपने रिसीव की है 3 लाख की, वो आप रिड्यूस कर दोगे एक्सपेंडिचर में, क्योंकि उस पे आप बोरोविंग कॉस्ट नहीं निकाल पाएंगे, क्योंकि इफेक्टिवली यूज नहीं किया आपने फंड। इन इफेक्ट आपने फंड सिर्फ 2 लाख का यूज किया। वन थिंग सिमिलर इज द कॉन्सेप्ट टू बी यूज फॉर ग्रांट रिसीव्ड इन एडवांस। ग्रांट्स भी अगर आपको गवर्नमेंट से पैसे, आपको कस्टमर से नहीं मिले, गवर्नमेंट से मिल गए, किसी से भी ग्रांट से मिल गए, पैसे तो आपको मिल गए ना, तो इन इफेक्ट अल्टीमेटली बात वही होगी कि आपने खर्चा पूरा किया ही नहीं है। आपने 5 लाख का खर्चा किया, 3 लाख रुपए आपको मिल गए, तो आपका फंड तो सिर्फ 2 लाख का लगा है। ये माना जाएगा जेब से आपके 2 लाख लगे जिसपे आपको बोरोविंग देनी है, क्योंकि जनरल बोरोविंग की बात है, बाकी बोरोविंग आप कहीं और भी यूज कर रहे हो। तो इन दैट केस यहाँ पर आपको इन इफेक्ट फिर वही बात है, चाहे ग्रांट के फॉर्म में मिला हो चाहे प्रोग्रेस पेमेंट के फॉर्म में मिला, आपको रुपए मिल गए, तो आपका जो नेट इम्पैक्ट है वो रिमेनिंग अमाउंट पे ही है जो आपको एक्सपेंडिचर पे करना है। फाइन। तो इनकम ऑन टेम्पररी इन्वेस्टमेंट ऑफ स्पेसिफिक बोरोविंग ये रिड्यूस नहीं होती ना, क्योंकि आपको तो जनरल बोरोविंग केस कर रहे हो, एक्सपेंडिचर की बात हम वहीं पे कर रहे होंगे कैलकुलेशन के लिए। स्पेसिफिक बोरोविंग में हम टोटल अमाउंट जो हमने बोरो किया हमको उस पर इंटरेस्ट कॉस्ट निकालना है, वहां पे हम एक्सपेंडिचर सिर्फ ये जानने के लिए करते हैं कि किस डेट से कैपिटलाइजेशन स्टार्ट करनी है, पर किस अमाउंट पे कैपिटलाइजेशन करनी है स्पेसिफिक बोरोविंग के केस में तो स्पेसिफिक बोरोविंग होती है। ठीक है, तो टोटल वैल्यू होती है। तो यहाँ पे हम अमाउंट ऑफ एक्सपेंडिचर जो हम निकालना है, क्वालिफाइंग एसेट का एक्सपेंडिचर जो निकालना है, उसमें हम टेम्पररी इन्वेस्टमेंट की स्पेसिफिक बोरोविंग की इनकम को नहीं रिड्यूस करते हैं। इनकम ऑन टेम्पररी इन्वेस्टमेंट ऑफ स्पेसिफिक बोरोविंग वी रिड्यूस फ्रॉम बोरोविंग कॉस्ट, नॉट फ्रॉम अमाउंट ऑफ एक्सपेंडिचर टू अ क्वालिफाइंग एसेट। ओके, ऑन अ क्वालिफाइंग एसेट का जो खर्चा है उस पे हम सिर्फ प्रोग्रेस पेमेंट और ग्रांट रिसीव की बात करते हैं। इनकम ऑन टेम्पररी इन्वेस्टमेंट ऑफ स्पेसिफिक बोरोविंग का रिडक्शन हम जो करते हैं वो बोरोविंग कॉस्ट पे करते हैं। इंटरेस्ट टोटल स्पेसिफिक बोरोविंग पे जो इंटरेस्ट निकला है उसमें से हम ये वाली इंटरेस्ट इनकम को माइनस करते हैं। There is difference. समझ गए ना? I hope it is clear. So with that, I'm just ending the session. Sorry for taking it so long, but hope you enjoyed the session, being participative, and thanks for being participative. It was really very good, and hope you found this session to be fruitful, and will be using this for the remaining questions of test and knowledge which has not been covered by me because of lack of time. And also that particular question which I told is a good question given in your test and knowledge, question number 4, do solve it on your own. Since we have taken a long time, even if you can spare 10 minutes and solve it immediately, and it will be good for you because it will be using those concepts. Even if not after 10, you're not able to use this 10-15 minutes immediately, but do it by end of the day. If you find any problem, please let me know. I have given you my mail ID. I have given you my contact number also. Still, if you are having any problem, I am once again writing you, download BOS mobile app. In that, ask a query option is there. You can ask there. Or this is, sorry, my fr-final@ici.in. If I'm not doing my slideshow, so this is not done. So please ask, in case you're having problem, you may ask it there. Okay? All the best. Thank you for being participative and listening me patiently. Thank you.